Thanks everybody for taking the time out of your busy schedule today. The markets are been pretty hectic week. Honestly, it seems like every week is a hectic week nowadays. And one of the things is, when the market is at such high levels, the volatility is greater, the moves are greater. So what I want to talk about today is things, that you should know about order flow. And really my goal today, sort of what I wanted to tell you about order flow is how simple it is and easy it is to use order flow in your trading. Now, what attracted me to order flow years ago, and I'm talking about, well over, 10, 15 years ago, was that I wanted to be able to see things in the market that other traders didn't. I wanted to understand why a market moved when there was no reason for the movement. Sometimes, especially nowadays, electronic trading is very fast, very quick, and you see the markets just literally turn in a second, all right? And we may not know the reason why it turned, but if we understand what's happening in the order flow, we could say, oh, yeah, now it makes sense. I could see why the market turned here. So order flow is based on what's happening in the market right now. And why is that important? It's because you have to trade the present, not the past. And what benefits traders more is by analyzing what's happening right now in the market because that's based on what's trading right now, right? A lot of people like to talk about their fancy indicators, their moving average, et cetera, but all that stuff is based on price, which happened in the past, not necessarily what's happening right now. Now, for those of you that haven't got it yet, I'm going to show you how to get a copy of my book for free. It's called Trading Order Flow. It's a 150-page book. You're not going to get a hard copy. You're going to get a link to the digital download. But if you stay till the end, I'll show you how to get it. Now, for those of you that are new to who I am, my name is Michael Valtos, and I've got over 25 years professional trading experience. Now, when I say professional trading experience, I don't mean I traded my own account, while I worked as, in another industry. No, I was in the industry, in the futures industry. I started on the CME trading floor, literally as a runner. That's as low as you can start. And I worked my way up from there. I spent about 2.5 years on the CME floor in the currency quadrant. Then I left the floor to work on the upstairs trading desk when electronic trading started taking off because you know what? I thought that's where the future of the industry is going to be, and that's where I want to be. And that was back in the early 1990s. After Dean Witter, I joined EDF Man, the big English trading company. It's been around since the 1700s. Spent 2 years there on their global macro futures trading desk. Then I left Man to join Commerzbank, right, the big German bank. They opened an office in Chicago, and I was hired as a Eurex trader, right? I traded Bunds, Bobbles, Schatz, DAX, Euro stocks against all the U.S. products, right, against the S&Ps, against the 10-year notes, 5-year notes, etc. After Commerzbank, I then joined Cargill, right, the big U.S. commodity trading company, and it's either the largest privately held company, or I think some other company just overtook it, but it's they account for about 30% of the grain exports of the United States, about 25% of the meat exports, but they literally trade everything that's tradable. And I spent 4 years there. They sent me out to Singapore to set up a trading desk when the exchange in Singapore closed. And after Cargill, I joined JP Morgan. I spent 8 years at JP Morgan, vice president of futures trading, on the trading desk trading, not sitting in an office, looking at spreadsheets, coming out every once in a while to talk to the traders. No, I was the trader. I was on the trading desk. After JP Morgan, after I got married, after I had my first child, I realized, what, this is not what I want to do. I don't want to have a heart attack working, 12 hours a day, in a bank. So I left JP Morgan and, I knew how to trade. So I just figured I'll just trade for myself. And so I started writing my book on order flow, the book that you get at the end. And I was trading with the order flow already, but the software that was out there, I felt lacking. Okay. It was just, as I was writing my book, I realized there's all these little nuances of order flow that I said, you know what, I could take all that information, put it in a software rather than just having your normal, you know, footprint chart looking at the order flow. I said, let the computer highlight certain things to me, what's happening in the order flow to make my life easier. Okay. And the platform that it runs on is NinjaTrader 8. So really, it was a transformation for me, right? Because I wanted software that would help me in my analysis, make my analysis a lot easier, but at the same time, it didn't exist, right? There was just your normal order flow footprint chart, but I said, you know what? Let's make something better, right? Apple didn't invent the mobile phone, but they just took the existing technology that was out there for the phone and made it better, right? So you're going to realize there's more to just order flow than just delta, point of control, and imbalances. And again, the reason I just talk about that is because the charts that are using in this presentation are generated from my order flow software. But again, what I'm showing you today can be applied to any other footprint chart, but you have to know what to look for, right? So, and that's why I'm here to teach you what to look for. So you'll see how easily and quickly you can apply order flow analysis to your trading. So, just a brief disclaimer, stocks don't always go up. We're in an unprecedented time where it just seems like anything you buy goes up, although the last couple of days, everything you buy just goes down. But, over the last, literally almost the last year, we've been on this tremendous bull run in the market. So what is this about? Well, it's about order flow is about taking the different pieces of market information, right? Imagine the market's like a puzzle. You're trying to put the pieces together. And it's just like you pick up this piece, okay, I see it goes here. Then at the end of the day, hopefully you had a good day and you put the pieces of the puzzle all together during the trading day and you're able to come out ahead. So your normal bar chart, right? This is what most people look at when they come to the markets, right? Everyone's familiar with the normal bar chart, but have you ever thought about, for a second, where does that information come from, right? Why does the market stop here, and reverse up here? Most people don't really get to that point. They're just looking at this and see, well, yeah, the market opened at this price, closed at this price, had a high and a low here, but they never really think about how it's formed. Well, it comes from the time and sales, right? It's a record of every trade that occurs on the exchange as it occurs. Now, time and sales has a timestamp, okay? And it also tells you the price traded and the quantity traded at that particular time. But it also tells you what people don't realize is whether the trade was on the offer side or the bid side. And that's very important information, right? Honestly, when I first started on electronic trading back in the early 90s, the Chicago Board of Trade, on their electronic trading system, they had this little ticker that would run at the bottom. And, most people, myself included, and everyone else on the desk was like, well, why do we need to see, what's going through? But it was really important because, on the trading floor, right, in the days of open outcry, you'd be able to see, which bank was buying or which big local was selling, and that was important information. And the Board of Trade was the only firm at that time that had that information available. So, you could see if there was a big offer, if Solomon Brothers was the offer, and you, if you're in the industry long enough, you know that who Solomon Brothers customer was, generally trading big size in the bonds and things like that. So that was important information. Nowadays, things are more anonymous in the sense that you don't know who the big players are, and the way execution algos are, they really break up an order into the smallest size possible, which is one lot. Now, this is just a screenshot of last night in the MNQ, right, the micro NASDAQ, and you could just see like every trade that goes through is like one lots, three lots, and it's really hard to get an understanding. But once you understand, well, did that one lot or this three lot trade on the bid, or did it trade on the offer, you could start to see, if traders are aggressive in the market. And all this information, right, is not, you're just not really looking at it on a bar chart. You're just looking at the price that traded. But when you take it and you put it on a footprint chart, you start to get more information than just the open, high, low, close, right? You're going to get information like the delta, which is the net difference between aggressive buyers and aggressive sellers, right? Remember earlier on the time and sales, right? You see different colors. You see orange colors, you see green colors. Well, if it's green and orange, it tells you, whether someone is lifting the offer or hitting the bid. And that's going to show up on the footprint chart. Excuse me. as well as other information, right? As well as the point of control, which is the price level in the bar with the most volume. You're also going to see imbalances, areas where there was more aggressive buying than aggressive selling, or vice versa, more aggressive selling than aggressive buying. And all this information, delta, point of control, and imbalances, for the longest time was really all that people looked at in the order flow. And it's good information, right? Because imagine you have open, high, low, close, which everybody looks at. But if you can take it a little bit deeper, right, delta, point of control, and imbalances, you're going to start to understand how the market is trading. Is it very aggressive, or is it less aggressive? Is the aggressive trading getting stronger in a direction, or is it getting weaker in that direction? If it's getting weaker in a direction, chances are that that move is going to end. So there's all little things like that, right? So just really quick, the delta is the difference between aggressive buying and aggressive selling. How many buyers, how many people are buying the offer versus how many people are selling into the bid. Imbalances is when the aggressive buyers outnumber the aggressive sellers by 4 to 1 or more, and vice versa. Now, 4 to 1 is not set in stone. You can adjust that. Some people use 5 to 1, some people use 3 to 1. It really depends on your trading style. So you can see, right, already we're starting to look at really what the aggressive traders are doing. Are aggressive traders buying or selling? And, a lot of people, they think that, well, for every, you know, in the old days, right? People, you'd call your broker, market's down 2%. What happened? Well, there's more sellers than buyers. Well, no, there's not more sellers than buyers. What you have is more aggressive sellers than aggressive buyers, right? Because obviously for every buyer, there has to be a seller. But when you have more aggressive sellers hitting the bid, taking out whatever's bid there, then hitting the next bid, taking that out, hitting the next bid, more aggressive sellers than buyers to cause the buying to go back up. Now, point of control is simply the price level in the bar with the most volume, okay? And that's important because oftentimes, depending on where the most volume occurs in a bar, it can be very revealing in terms of market structure. Did the market stop at this level or something else happened? Okay, so, all these little pieces, they start working together and give you a lot of information. But knowing what the delta, point of control, and imbalances are is one thing. You have to know how and when to apply them to the market. It reminds me of back in high school, right? Algebra, right? We're all sitting there in our algebra class, our trigonometry class. When am I ever going to use this information, right? And all these little pieces of information, like delta, point of control, and imbalances. We know what they are, but a lot of traders just don't know how to put the pieces together. Okay, so this was again yesterday in the MNQ, right? You'll notice point A, market sold off and then rallied from there. Point B, market sold off, rallied from there. Point C, market rallied and then sold off from there, right? You ever thought about how these levels form? A lot of people like to come up with, well, this is a fib number, or there's a trend line you could draw in from here. You can literally draw lines from everywhere. I've seen people post charts online, on Facebook groups and things like that. And they literally got lines like every 5 points. And it's just like, then it hits that level. Oh yeah, see, I called it. Well, yeah, you got every 5 points, you got a line. But when you're watching the market trading in real time and you can start to understand what's happening in the market, it just really starts to make sense. So let's break it down. Okay, so point A, right? This is the first area right here where we came down. What was that, about 12.15 yesterday in the micro NASDAQ, right? 12.875. And then we reversed and started rallying back up. Well, as you can see, what's happening, right? Just on a delta basis, right? The bar before it, right? Big down candle, down red candle, right? Big negative delta, minus 421. Then this next bar opens up. Again, it's opened up and it's a big red bar down, right? It's got a very strong negative delta, minus 405 in the min delta. And that's telling you that aggressive sellers were in control. But what happened? Market reversed, closed higher, and you went from minus 405 negative delta to plus 58. Now, plus 58 isn't the strongest delta number to land on, but what did you have? Early on in that bar, it was very strong negative, minus 405. Everyone was thinking, oh, this is it, we're going lower. We hit 875, next stop, 800, all right? But it reversed. So it went from minus 405 all the way up to 0, and then plus 58 where it closed. Actually went up to plus 71, which is the max delta. Then we closed at plus 58. So it went from minus 405, ate all that back, gave back 405 aggressive sellers, and took on another 71. So that's a big swing, right? So what was happening in this bar was very early on, the impression was that we were going lower, right? And honestly, it looked like we were going lower. But no, buyers stepped in, aggressive buyers stepped in and said, no, we're stopping it at this level. And market reversed, closed higher. Market took off, right? It went back up, went all the way back up from 875 all the way up to what, 930, and then it sold off again. Okay, this time it didn't get down to 875. It just got down to around 887 and or 886 and a half here. And then it reversed and it went back up again. Now, what's happening this time around? Okay, it's slightly different. Okay, we're coming in, we're coming in hot and heavy, right? It's got very strong negative delta, minus 300, minus 533, but then minus 127. Then it turns positive, 160. Okay, so delta is decreasing, minus 500, right? Minus 127, right? And then it's positive. Okay, well, how do you expect to go lower if we got positive delta, right? Well, chances are we're probably not going to go lower if there's aggressive buying happening, okay? And then the next bar confirms it with a big, strong positive delta plus 719, right? And then we rallied from, this 890, 900 area all the way back up to 950, came off a little bit, started going sideways, then came back up, poked a little bit higher here at point C, and then we sold off basically for the rest of the day, right? We sold off from, what is that, the 940, 950 area, all the way down, 150 points basically. But let's take a look at point C. What's happening here? Well, we're coming back up. This is that point C high right here, okay? This big red bar with positive delta. Okay, but you're thinking, we got positive delta, why isn't the market going higher, right? You're thinking, well, Mike, you just said, we can't go lower on positive delta, but here we are going higher on positive delta. Well, you sort of have to split this bar in two here, right? Because what's happening in this bar? Well, up here you've got some buying imbalances, right? You got 19 against 83. It's a little hard to see on this chart because NASDAQ trades such big, you sort of have to scrunch it a little bit. You see 7 against 21, or sorry, 3 against 21. So you got some buying imbalances up here in this red bar. Okay, so market is rallying up. People are thinking, oh, this is it. We're going higher. We're going back up. The market's safe. Stocks only go up, and so they're all piling in here, right? But what you have happening up here is you have supply in the market, right? You have these big institutional players that have a lot of supply on the books. They're happy to sell it here at 850, or sorry, at 950, right? That's why you have these imbalances, because they're stacking the order book. They're working their offers up here, right? They're providing liquidity into the market that buyers are just happy to gobble up. Once these buyers gobble this up and they realize, uh-oh, we're not going any higher, it leaves these imbalances in here, these buying imbalances. Market starts drifting lower. These people that were buying up here at 949, 948 and a half realize, oh no, oh no, oh no, 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 no. The market starts selling down, right? It starts coming off. We're trading 44, 42, 40. They're long from up here at 50, right? So I gotta get out now, right? So they start covering it down here. Bar closes lower, right? You're still left with that positive delta because you had that very strong buying early, right? And then the market starts trading down, down, down. Obviously, there's things here in the order flow. There's these what we call exhaustion prints here at the top of these bars, meaning this move is done. Stick a fork in it. It's going to happen. It's just going to fall over. This is a very bearish point of control right here. That's why it's colored red. But really, the sign was in this bar. You have this big, strong positive delta. At one point, it was 252. But you look at this bar, right? This is the thing, right? Where it gets kind of misleading for people, right? They're thinking, well, I got a positive delta. Why isn't this market going up? But then when you look at it, you say, oh, now I understand why the market didn't go up, because I had people, the market just put in a rally. We just took out our earlier high at 948, right? We popped back up here above 950. Oh, that's it. We're breaking out. We're going higher. Well, no, these people are trapped. They're caught off sides in the market. And then the market sells off. I didn't expect it to sell off to new lows, and the rest of the day expected it to come off, at least 20 to 30 points. But nevertheless, that was the clue that the market gave you, and you could see it as it's happening, as it's unfolding right before your eyes. Now, this was crude oil yesterday, right? Crude oil, we hit this high and sold off, right? Well, what's so special about this high? Well, anytime you're up at the high of the day, you gotta be asking, why are we here? What's going on? Is But if you're looking at what's happening in the delta, you're at your high of the day, and all of a sudden you're seeing selling come in, right? Negative delta 138, negative delta 165, then a small delta 11, 33, 25, more selling, right? Here, big negative delta at minus 264, right? And that's all coming in right in here, as you're at the high. Do you think this market's going to go higher if you see the aggressive selling come in? No, then we sold off about 50 cents, right? Market eventually came back up, you know, to this high a little bit later, about 130. But, really what was happening here, right? You could see the selling coming in, right? All right in here, right? In the negative deltas, minus 138, minus 165, minus 264. You could safely say, well, you know what, if it starts to break down, just, around here, I could get short, right? Because, what's my risk? My risk is up here at the high, or even lower, you know, a little bit off that high. But as you hit that high, what happened? You attracted sellers into the market, right? Then you could just see, right, the market sold off. It sold off all the way down to the 60 area. And it came in here, right? This was sort of that lowish area. But if you're looking at the volume, right, you can see that big, heavy volume going through. This is more of an advanced concept, right? You can see the point of control down here, but you can see this volume, right? 115, 132, 126. Even earlier, as we're coming down, we're running into some liquidity to support this market. 161, 148. 143, 162, and then in this bar, 115, 132, right? You have this sort of this area here where the market goes back up, comes back down into this area between 68 and and what is that, 58. This 10-cent range is your support, right? We came back into that level. Then the market went back up again, made a new high by a tick, one tick, new high. Sometimes people get excited. We're starting going back up to the high of the day. Okay, thinking this is it. We're going to break out and go higher. What happens? Nothing. One tick high, then the aggressive selling reappears, right? We're up here at the high of the day, just made a new high. But what do you have? Aggressive selling, minus 144, minus 136, minus 350, okay? Not exactly the most encouraging thing, as a trader to see at the high of the day is aggressive selling. In the sense that if you're at the high of the day thinking the market's going higher, you do not want to see aggressive selling creeping into the market at strong levels. And the thing is, you just use your brain to see, well, yeah, okay, is this a strong minus 144 negative delta? Yeah, considering that the previous bar was 128, the previous bar was 36, the previous bar is 132, as you're at the high. So what you have here is you got negative delta that's stronger than any of these previous deltas. You got to go way back here, 10 minutes earlier to find any delta that's a little bit stronger. But what you have in now is you got the aggressive sellers coming into the market thinking, you know what, this is a great opportunity to get short, okay? E-minis yesterday, all right? Market sold off, rallied back up, and just sort of hung around here, right? Then we sold off another 10 points, rallied back up, took out that high, then sold off. But what was so special about this, right? This was a quick move down right here. You can see these bars, 1, 2, 3, 4 bars where it just dropped 10 points. I mean, it's just sort of rallied up here, sort of did nothing, went sideways, and then dropped, right? Then rallied back up. Well, what you had earlier at that level, at around the 14 level, is what's called a stacked imbalance, right? Where you have aggressive sellers, right? What's an imbalance, right? An imbalance is where you have more aggressive sellers than aggressive buyers, if it's a stacked selling imbalance, by a ratio of 3 to 1. But that's just an imbalance. But when you have a stacked imbalance, that means you have 3 imbalances stacked neatly on top of each other. And you can see it right in here, right? This 584 against 75, 103 against 0, 456 against 2, right? So you got 3 imbalances all stacked neatly on each other. A lot of times you have bars that have imbalances, and oftentimes you can see they're spread out right here, these buying imbalances, right? Here's 3 imbalances, but they're not stacked on each other. Here's just 2 imbalances stacked on top of each other. It's just 1. But when you have 3, it gives it, I don't say it gives it more weight, but that's sort of the area where things get interesting in terms of order flows, because what's happening, right? When you have 3 levels or more, I mean, it could be 4, it could be 5, but what you have is oftentimes is you have a quick move, right? Somebody's wanted, there's a big order going through the market for whatever reason that they want to fill, right? And it leaves what's called a stacked imbalance. And oftentimes you see the markets, come back and test those levels, right? Because if you had aggressive sellers at one point, well, chances are if we get back to that area, you want to know if those aggressive sellers are coming back into the market. And what happened is it rallied, sold off, rallied all the way back up to that level, and then sold off again, right? Sold off 10 points. So, you can see how order flow can help you as a trader. But, a lot of people, they think, oh, you know what, that's great, but it's too complicated. I'll never remember how to do it all. So what I want to show you today is to make it as simple as possible, right? I want you to focus on one thing, right? Bars with multiple imbalances that are not neatly stacked on top of each other. Now, I just talked about a stacked imbalance, right? Where you had, right, 3 imbalances stacked neatly on top of each other. But what if it's not stacked neatly on top of each other? What if you have a bar with 3 imbalances, but they're spread out, right, in a bar? Well, does that mean they're not important because they're not stacked on top of each other? Well, no. I mean, they're still important, if not more important, right? Because one, everybody is looking for stacked imbalances. Everybody knows what stacked imbalances are that uses order flow. I mean, that's one of the basic trade setups that people look for, stacked imbalances. But what people don't look for some reason, I don't get it myself, they don't look for those bars that have multiple buying imbalances that are spread out, right? They may not be stacked neatly on top of each other. Like here's 1, right? 2 against 237, 5 against 203, 19 against 98. They're not stacked neatly on top of each other. They're spread out. But what you have is you have aggressive buying being spread out throughout the bar, right? Causing imbalances in the bar. And that's important because people, for some, they're just not looking for that. But you have that aggressive buying in the bar. Now, this is E-minis yesterday, right? Right. Remember, we opened up, cash opened here on the 14 level, rallied all the way up to 24, sold off back down to, the 10, 11 level. But why? Why does it reverse here? Why does it reverse here? Well, if you're looking at a footprint chart, you would understand why, right? You can see these imbalances in here, right? The bottom of this candle, 182 against 40, 172 against 13. 155 against 2, 198 against 7, 59 against 2, right? Even this other bar here, you got 1, 2, 3, 4 imbalances. 2 are stacked here, then sorry, 5. 1 here, 1 here, 1 here, 2 here. Even this next bar, 1, 2, 3, 4, 5. These are spread out also, right? But what if there was a way to say, to highlight to you that, hey, you got these multiple imbalances. pay attention to what's happening in the market, right? And that's, when I created my software, that was one of the things I wanted to have in there. It's like, you know what? I'm watching so many different markets, and when one market's moving, chances are some of the other markets are moving, and it might be, not say difficult, but it might be hard to notice some of these little things. So I said, why don't we put a signal on the chart to tell me, hey, you know what? You've got imbalances happening here, multiple imbalances in a bar, right? So what we do is we put a box around it, right, to highlight that to you. Just, because we're visual. We are so used nowadays to Facebook and Instagram, just, scrolling through our timeline, so to speak, and seeing, images and reacting to those images, right? The mind processes images at a much faster rate than numbers. Okay, so I'm not necessarily concerned about what the numbers are in the bar, in the footprint. I'm concerned, are there imbalances, right? And I can see 1, 2, 3 bars here out of the 4 that have multiple selling imbalances. Okay, that's my clue that, hey, you know what? Up here, I got aggressive selling coming in, right? I can get short, right? Just by seeing that, all right? Just by seeing, something so simple, right? Then what happened? The market sold off. We hit this area down here around 10. Now, this is a prominent point of control. I'm not going to talk about prominent point of controls today because that's a whole nother training session, but I've got a lot of videos on YouTube talking about prominent point of controls. But what do you have in this bar? Right, you've got 1, 2, 3, 4, 5, 6 imbalances. Now they're not stacked on top of each other, right? You got a space in here, you got 2 price levels here. These 2 are stacked on top of each other. Then another 2 normal order flow volume levels going through, then another 2 imbalances. And if you're just looking for stacked buying imbalances, you're going to miss this, right? You're not going to see this bar, which is very bullish, right? But if you have something that could highlight it to you, something so simple, right? Again, it's not, some fancy black box mathematical equation that you're not going to understand. You understand the idea of imbalances, right? You understand the idea of stacked imbalances. What this is just, it's imbalances in a bar that are not stacked neatly on top of each other over a certain level, right? Over 3 to 1. You could adjust it if you want to have bars with 4 imbalances that are not stacked on top of each other, or 5, um, or even 2, right? Depending on the type of chart you're trading. Say you're trading a really fast chart, a 233 tick chart, maybe you want to use 2 levels of imbalances. So, there's a lot of flexibility with it. But again, if you're not looking for it, you're not going to see it. Right? So remember, the information you see on your bar chart comes from what's traded in the market, right? From what you see in the time and sales. But a candlestick chart leaves out the most important part of that data, is the volume that's traded on the bid, the volume that's traded on the offer, but more importantly, how it traded. Was it aggressive? Was it your just normal order flow, right? Markets exist to facilitate trade, right? Markets exist for people to transfer risk from one party to another. Again, yesterday in the E-minis, right? We come up here, we just sort of go sideways, then we start falling apart here around this 24, 25 level, right? And we sell all the way down to 04, 05, right? Rally, put a half-hearted rally back up, sell off again, and rally back up. And if you remember, this was that area where it sold off in here, right? This was that stacked selling imbalance here, okay? That's all well and good, but would you rather be short from, the 13, 14 area, or would you rather be short from 26, 25, 24, right? When we sell all the way down to 04, that's an extra 10 points that, if you're looking at just stacked imbalances, you're not going to pick it up, right? And what do you have here, right? This is that area right in here, in this circle, right up here. This is this red bar, right? And what makes this red bar so special than this one or this one or this one or this one? Well, it's got the multiple selling imbalances. 777 against 31, 39 against 7, 191 against 39. And then 2 bars later, another 3 selling imbalances that are not stacked on top of each other, right? So you're going to miss it if you're only looking for stacked selling imbalances, right? Then the market sold off, right? We sold off, again, that's from this first bar is happening around the 25 area, 25, 26. Then this next bar, 20, what is that, 21 to 24. Okay, say you miss it up here and you catch it here. Okay, you're getting short from 21, 20 worst case, all the way down to 04. Then you come down to 04, right? Your market's selling off. You're still seeing selling imbalances, bars with multiple selling imbalances. That's what you expect to see in a market selling off. But then it hits this area, comes in, boom, goes sideways, 1, 2, 3 bars. But in this third bar, what do you have? Multiple buying imbalances, right? You got 1, 2, 3, 4, 5 buying imbalances, right? Then the next bar, 1, 2, 3 buying imbalances. Now, none of these are stacked buying imbalances of 3 or more. So if you're looking, again, just for stacked buying imbalances, you're going to miss this, right? You're going to miss this. So you're going to miss that move right here, back from 08 all the way back up to, 16, right? So you're going to miss this move down, miss this move up, right? Now, I'm not saying, you'd sell up here and cover it down here. You'd sell it here, probably cover somewhere down in here. Then you see this multiple buying imbalances. You get it here, you can cover up here. Right? I'm not saying you buy at the low, sell at the high, but there's chunks of market activity that you can get. So, just fair warning, don't just go out and start trading every bar that has multiple imbalances in them. Put them in context of the market, right? Always trade in context of the market. That's what being a trader is. It's not just about red light, green light systems. You want to be looking for a reason to sell when we're at our high. Don't come in thinking, oh, I got to sell at a high. If the market tells you, there's aggressive selling coming in at this high, okay, that's great information. Or if you're at a low or the low of the day, swing low, whatever, but the market is showing you that, hey, you know what, the aggressive buyers are coming in. You got a lot of buying imbalances coming in here, telling you traders are scooping up this, these low prices. Take advantage of it. That's what putting it in context of the market is. Just don't go out and blindly trade every bar that has multiple imbalances. Crude oil, right? What's going on down here, right? We're just, we sell off, boom, then we just sort of go sideways in here. Then we rally $1 yesterday, right? All these charts are from yesterday. Well, as we sold off here, right? All of a sudden, 1, 2, 3, 4 bars with multiple buying imbalances. None of these are stacked imbalances, right? They're all spread out in the bar. So, if you think that, well, stacked imbalances are the way to go, I'm thinking take it a step further, look outside the box, look for those bars with multiple buying imbalances. Now, again, you don't have to have my software to see this. You can look at the chart with your own eyes, but having software that's going to highlight it to you just makes it that much easier. When traders first learn about order flow, they learn what delta, what point of control is, what imbalances are, but then they're sort of left to figure out on their own how to use those pieces of information. Again, what's the point of having information if you don't know how to use it, right? This was crude oil this morning, 7:45, boom. We had a couple bars here. We came into a swing low. Aggressive buyers started coming in. E-minis this morning, 3:50 in the morning, we had a 10-point sell-off from 94 down to 84. Why? Multiple imbalances, right? What makes this red bar different from these is this is the bar with the multiple imbalances. These didn't have anything. Even these green bars, nothing special, no multiple buying imbalances. So what I just showed you can be done by looking at any footprint chart, but you need to know what to look for and when to look for it. Honestly, when the market's moving, especially like yesterday, even today, right? When the market's down hard, it's easy to overlook things and miss things. Let your trading software do some of that heavy lifting and show you things in the market like market weakness or market strength, right? Signs of aggressive buying is market strength, right? Order flow is about taking the information that you see, that you have access to, and putting it into an easy read format. So, in this past 40 minutes, hopefully you agree it's time well spent, but you can't cover everything in, a 40-minute or 60-minute training session. But I got a special offer for you so you can get up to speed and learn everything you need to know about order flow as quickly as possible, right? Order flow is a great way to trade the market. Now, the Orderflows Trader software, right, the software I developed, it runs on NinjaTrader 8. It doesn't run on Sierra Chart. It doesn't run on TradeStation. It runs on NinjaTrader 8 because it's a very easy and stable program to trade with. And it's a volume footprint chart with 17 pre-programmed tools, right? I just talked about multiple imbalances, so there's another 16 tools on there for you. It takes 2 minutes to set up, right? You don't need fancy templates or anything like that. It really just plug in, import, you put NinjaTrader on, put the Orderflow Trader software on, and you're basically set. Normally I sell this for $8.99 on my website by itself. Just the software itself is $8.99. But it's really like the software, the best way to describe it is like taking everything from my brain that I've learned, in 25 years of institutional trading and putting it into a program to help you dissect and understand what's happening at the market. If you're looking for a red light, green light system, this is not for you. This is for people that want to understand what's happening in the market. But having software is one thing. You need to know how to use it, right? I mean, I've bought software in the past, all sorts of different softwares, and I don't know how to use it. I just give up, right? So I provide you a lot of extra education to get you up to speed on not just how to use the software, but order flow in general. So I give you access to my order flow trading course, and you can get it for free. You can buy it on my website for $297. I'm going to give it to you for free. I'm also going to give you access to my Inner Circle video series, right? There's 56 videos in there of advanced order flow tips and analysis and tricks, different ways to read the information that is presented to you in the order flow. So you start adding all that up, and it starts. People say, "Oh my gosh, it's $16.93," but you're not going to pay that today, right? And the other thing that I want you to realize, right, it's one thing to learn from videos, but it helps to have some sort of hand-holding live training available to you. So every Tuesday night, and I've been doing this for over 2 years, probably close to 2.5 years, I do a live training session every Tuesday from 7 until 8 p.m. on Tuesday night Central Time. And I talk about things I saw in the market and about order flow in general, right? And if you want to come in, you got to ask me a question about something. I'm there for you, right? It's your time to spend with me. We can, I talk about all sorts of things. Time for you to ask questions, things you're stuck on. And if you can't attend, there's an archive that you could go to. Some people charge extra for this, right? I mean, what's the point of buying software than having to pay extra for training, right? That should be included in there. So, you start adding it all up and it's close to $2,000, but you're not going to pay that. You're just going to pay $749 today, right? It's a one-time payment. It's not a recurring payment that you can't cancel or anything like that. It's just $749. Of course, you'll still need to pay your data fees. So, a lot of people say very nice things about the software. It helps them understand the market. So what you do is you go to orderflows.com/oft3 and you scroll down to the bottom of the page and it takes you here. You just click that button to get started. It takes you to PayPal. PayPal processes your payment. And again, to get started, go to orderflows.com. So you got to figure out what motivates you in life. What do you want to be, right? For me, freedom, right? Be able to do what I want to do when I want to do it. That's what trading provides me. Now, as a special bonus for Investors Expo, I'll give you access also to my order flow playbook, right? It's an additional training. You're going to get it for free, right? So go to orderflows.com/oft3. You're going to get all this here, the Orderflows Trader software, the trading course, the Inner Circle video series, live weekly group training, and you're going to get the order flow playbook. So to get my book, go to orderflows.com/book.html, takes you here, enter your name and email, hit submit, takes you to the download page. So again, to get started, go to orderflows.com/OFT3. Anna's already put it into the chat, but I'll also put it in there along with the link for the book.
So I'll go ahead and kickstart this to be respectful of everybody's time. My name is Stephen Cawiezell with thetradersplan.com. This is me right here. You can see it on the screen. And today I'm going to cover a topic, how to create weekly income in less than 20 minutes per week. This is going to be a very rules-based approach. You're going to hear the words rules-based, because I believe in a rules-based approach to help create your trade plan, to help you make a lot of money and also to keep you from losing money, especially in times like now that are really, really choppy. So I always like to start off with a quote from the man, Warren Buffett. And he says it's far better to buy a wonderful company at a fair price than a fair company at a wonderful price. Now, what does he really mean by that? What he means is I like buying high quality stocks on a pullback. In a nutshell, that's what he's saying. And in the 70s, it was actually his business partner, Charles Munger, that got him to really change his mentality because for years, if not decades, Warren was really just trying to find, middle of the road companies, maybe not that high quality, but he was trying to buy them at bargain basement prices. So it was Charles Munger that convinced him to buy a wonderful company at a fair price than maybe a not so wonderful company at a basement level prices. So this is the basis of what I'm teaching you today, and I believe it's very appropriate. Given the market is a little choppy right now, it's pulling back. This is a great training for this type of market. So let's really look at this so you can prepare yourself. I get emails all the time from traders, and they send me charts, right? And there's been a lot of FOMO over the last couple of years, or I'll say over the last years, when you have cannabis stocks that have gone straight up, clean energy stocks, just a lot of stuff that is really crypto has been in a parabolic move, right? So I have people that send me these charts and say, hey, Steve, this is FUTU. This is a weekly chart. They're like, hey, I just bought this stock up here. What do you think? Now, this stock has already quadrupled in price, right? And has barely even pulled back. So the discipline, rules-based approach in me is obviously thinking that the FOMO took over, right? This is probably the not best place to enter. Well, usually what happens when people chase a stock or, FOMO really kicks in is, then you finally get your correction, your major correction, kind of like a lot of the clean energy stocks are right now. They're pulling back and they're pulling back hard because they went up so high, right? So this trader sent me this chart and I was like, okay, the very next week it peaked and then you went into a 35% correction. Now, I'm a conservative trader. I like conservative rules. 35% is nothing to sneeze at, and I'm not going to sit through that in any way, shape, or form. So even if this trader used a 10% stop loss, right, he still did not have a good entry, right? But likely he rode this all the way down. So what I'm going to teach you today is, hey, let's buy a high quality stock, right, on the best, on a nice pullback and a nice reversal bar, something that gives us the best opportunities to succeed, right? Because this is the signal bar that I'm going to be talking about today. This is the rules-based trading system I'm going to be talking about today. So instead of buying up here, yeah, maybe he got booked a little profits up there. I don't know, but what more likely happened is, he sat through this and it was pretty ugly. So instead of buying right here where the FOMO kicks in, let's follow a rules-based approach to say, what gives us the best chance to succeed? Okay, I'm going to buy high-quality stocks on a pullback. And this is the signal bar I'm going to talk about today because you can see a nice reversal bar. Excuse me, stocks went up, right? And then maybe you booked some profits along the way. Maybe you bought here, got stopped out somewhere around here. But look, the funny thing is, and I'm going to show you many, many examples, is sometimes these powerful stocks, they give you another opportunity to get right back in. So this is what I call the trader's path, right? There are 3 stages, and I have worked with thousands of traders over the years and really, help them build a trade plan. But I notice traders fall into 3 stages, okay? So they start with the excitement stage, and a lot of newbie traders, they'll start in the excitement stage. They're stage 1, right? This is where, they see something on TV or they see something online and they're like, oh, I'm going to make money. This is easy, right? So they have high confidence and either they're a newbie or they just started a new trading system that looks good on paper, right? So they're easily influenced. They're quick to pull the trigger. They really don't have a lot of rules because they're just excited, right? They just want to make money. They see, all the retail investors, the selected few that make money, and they just don't follow a lot of rules, right? So then what usually happens after this excitement level is, they get hit with a couple losses, right? And they get knocked down a peg or two, probably like a lot of people have here recently in the last month, right? They get knocked down a peg or two. So now they're like, okay, they need to regroup. They go into stage two. They're determined, but they're semi-confident because they just took a string of losses, right? It wasn't as advertised. So then they feel, okay, I feel like I need to know everything about the market. So then they go into this, research the market. And the problem with this is it's an information overload, and it can last years. You can stay in this for years because, you started something, it didn't work out, and now you're like, I feel like I need to know everything about everything to make money in the market, which isn't true. But they can stay stuck in this for a very long time. Now, it takes, it can take a couple years to stay stuck in this, right? To learn everything you can, and then you're still not making money. So then you move over to stage three, and then you feel lost, right? Because you just haven't broke out yet as a trader. So you don't have any confidence. You're revenge trading or home run seeking, right? You're looking for that big winner to help make up for the last 2 years if the market was up and you didn't make up that much. So it's a really rough stage to be in because you feel like you're playing from behind. So you're frustrated, you feel stuck until you find another trading system that looks absolutely great on paper or as advertised, and then you kind of go through the same thing over and over again. Okay, so the cycle can start over and over, and I've literally seen traders stuck in stage two for decades. Right? They never broke out, stage two or stage three because they just feel like they need to know everything, but they end up being jack of all trades, master of none. Right? So the real problem is traders, in my opinion, after teaching so many traders, is traders don't follow or don't have an objective rules-based approach, right? An objective rules-based approach. When I say objective, right, something to help you leave your emotions at the door, right? Just follow a set of rules. And you have to think about, your trade plan. Think about it like a business plan, right? On a business plan, you need a business plan to execute, right? Whether you're opening up a retail store or whatever the case is, you need that business plan to execute. You need, the financials. You need to look at it. The same thing is true with the trader's plan, right? So with a rules-based approach, you need to have a solid trade plan to really help you minimize your mistakes and really take the human element out of the equation. Because one thing I've learned is when you have a rules-based approach and you really take the human element out of the equation, and a perfect example of the human element is last year when the market went straight up from the end of March to the peak at the end of August. So many traders weren't participating because the human side of them said, hey, we're going to take another leg now. It never happened, right? But if they would have followed rules, we followed rules, we made money all the way up, even though deep down I did think that second leg was going to come. But that was an opinion, and my rules kept me in. So that's the kind of rules-based system I'm talking about. Now, my big promise to you today is I'm going to teach you an objective rules-based trade plan. I'm going to give you the money management rules on when to get in, when to get out. We're going to look at real life trade examples, and I'm going to show you how to trade this system in only 20 minutes per week. Okay? I know that's a big promise, but you're definitely going to want to pay attention. I'm going to give you some rules. I'm going to give you some things to write down. All right, shut off all electronics or anything that could distract you. And real quick, got to make the lawyers happy, so I'm just going to let you read that for a second. Okay, lawyers happy. A little bit about me, just so you know who is talking, who's on the other end of the screen. My name is Stephen Cawiezell, head publisher and founder of thetradersplan.com. I am a former financial advisor turned trader publisher. When I was a financial advisor, I worked in a practice with 60 million assets under management at one of the biggest broker-dealer firms in the country. I'm the author of Expert Trading Systems, which you can get on Amazon. I already said head founder and trader at thetradersplan.com. What I'm most proud of is I've helped thousands of traders set up a rules-based system, right? So now what makes this easy? What makes what I'm about to teach you easy? For one, there is zero fundamental analysis involved, just price and volume. No fancy special indicators, right? MACD, none of that, right? Just price and volume and rules. There are only 3 rules that you can literally write it on a Post-it note. So I challenge you, if you're sitting at your desk, reach in your desk, grab a Post-it note, whatever color it is, and I'm gonna give you some rules, and you can write it on that Post-it note and stick it to your computer. And it only takes 20 minutes per week, right? Our process and our system of finding these stocks to the time we buy it Monday morning, 20 minutes per week. Now I'm going to give you a big picture overview at first. So, this is a once per week setup. So we're going to be looking at weekly charts. So when studying the bottom of stocks, I noticed that there are certain qualities that all stocks have before they turn into winning trades. Now, in order to identify this money-making setup, we must recognize these qualities before they make their big move. Now, I have narrowed down these qualities to a rules-based winning system that I'm about to share with you. So how to set this up? This is what we do. This is where the 20 minutes comes in. We spend 15 minutes on the weekend going through our scan, find the best setups, right? I usually do it Sunday morning, right? I just run the scan, go through my top, narrow it down, and Monday morning, right at the market opens, I'm going to place a market order, right? So 15 minutes to scan, 5 minutes to place the order, maybe 20 minutes total, rinse and repeat, right? After that, go fishing. Don't stare at the screen. Go do what you love to do, right? This is not designed for day traders or people who want to stare at the screen all day, right? This is a lifestyle trading system that literally takes 20 minutes per week. So here are the rules. This is CrowdStrike. Okay, so this is CrowdStrike. This is a weekly chart, and we're going to go through lots of examples. And I think it's important to go through lots of examples so you can really, train the eye. So week number 1, or excuse me, these are the 3 rules. Rule number 1, 2, 3. This is the signal bar that we're going to be looking at. I'm going to really show you, we're going to break these down rules one by one so you can really understand it, understand the psychology behind these rules. That way you can understand it. Okay, so rule number 1, right? We're looking at this signal bar right here. Again, this is a weekly chart. Weekly chart must undercut the prior 3 weeks. What does that mean? So when I have a swing low like this, right, you got to pull back, you got to swing low. The low of this low right here needs to be lower than any point in the previous 3 weeks. 1, 2, 3, check. Okay, that's a very, very easy rule. The idea is that these 3 bars before the reversal bar right here, we could also call it a signal bar. These 3 bars do not have to be in order. This doesn't have to be lower than this, and this doesn't have to be lower than this. They can be in any order as long as this low is lower than the previous 3 bars. So why do I want it to undercut the previous 3 weeks? How many times has your stop been picked off? I hope it has, because that means you use stop losses, because that's just part of trading, right? And then it turns around, let's say you had a stop right here, and then it turns around and picks off your stop and then reverses and goes in the intended direction that you wanted it to. If you trade enough and you use stop loss, it happens all the time. It's just the cost of doing business. It's totally fine. Well, a lot of times what happens is when these people get stopped, mostly the retail traders and some institutions, they get stopped out. They don't want to buy it back, right? They get frustrated. They're like, I'm done with this stock. How many times have you just hoped the stock would go down after you get stopped out, right? Just so, you wouldn't be wrong. But it happens, and a lot of times it's when these stops are run and then it reverses, that's the best time to enter because it just got rid of all the weak holders. It shook them out. I like shakeouts, right? Shakeouts when you just shake out some weak holders, you run the stops, and then it reverses the other way, okay? So really the goal of number 1 is I want to run the stops. I want to frustrate some people. Instead of being the one whose stop gets run, I'd rather be on the opposite direction, ready to take advantage of that reversal, okay? Very, very easy rule. Rule number 2, I'm looking for the reversal bar or the signal bar to finish positive and close above the previous week's close, okay? Why do I do that? What's the logic behind that? Well, I don't want a reversal bar that, comes down, reverses, and then closes right here, and it's a red bar, like it's still down, right? That's showing me there's not a lot of strength, right? I want it to finish positive, I want there to be enough power in that reversal bar to at least close above the previous week's close. This is the weekly bar, so there are 5 individual days compacted in this bar right here. So when I see a reversal bar like this, it just absolutely swallows the previous bar. That is showing me that the bulls are trying to take charge in a reversal attempt. A trend change is underway. Okay, so I'm just looking for strength. I'm looking for power, right? So I noticed that if you have a reversal bar, it finishes red and it closes below the previous week's close. It has a high prone to failure, right? I want the bulls to be in charge. Okay, very simple rule. Rule number 3, must have above average volume. Okay, so I have the volume, right? Volume histogram. And my definition of above average is I just have a 50-day simple moving average plotted on this histogram. So if the volume bar is above the 50-day moving average, that's above average. It doesn't have to be above the previous week. It just has to be above average. Okay, now there is no moving average right here because there hasn't been 50 weekly periods yet. This was a fairly new stock at the time, but I think you can clearly see that this reversal bar right here, the volume that steps in is pretty much the biggest bar, in a 20 bar range, okay? Approximately, maybe 15 bars, but that's above average to me. Now, what's important behind that? What's important behind the above average? Well, I want to build on rule number 2. When I talk about power, I talk about strength. When you get a skyscraper volume like this, or this, or this, right? Something that is just above average and that really stands out. That is not you, me, or your grandmother purchasing shares up the street. That is the pensions, the hedge funds, the mutual funds. What's very interesting about, some of these funds is, one, they have to stay fully invested. So it's highly unlikely that they're going to take a above average size position and sell it the very next week, right? So they are either doing one of two things. They're either initiating a new position or adding to a current position. Now, the interesting thing about mutual funds is the average mutual funds, it can take 3 to 6 months from initiation, a pilot position, to completing their position because they can't buy $50 million in stock in one stock in a single day, like CrowdStrike. It would throw the price per share way up here, right? They have to do it in increments. So if it takes the average mutual fund, say 3 to 6 months to build a position, as retail traders, you and I have the flexibility to get in and out as quickly and easily as possible. So when we see this kind of price action, we see this kind of volume with the other 2 rules, we have complete flexibility to hop on the bandwagon and ride their coattail all the way up, right? Knowing that all these guys that bought right here, it is unlikely they're going to turn around and sell it. It's more likely that they're initiating a position, and it's likely that it's going to take them up to 6 months to complete that position. So I want to ride that trend all the way up. So that is really the 1, 2, 3 rules. I hope you wrote those down, and we're going to continue to look at more samples so you can, it's important to look at different looks so you can, visually be able to identify it on the chart. So here is Amazon, right? Here is a stock that I think is safe to say everybody knows. Look at all these green arrows. I challenge you, anybody, whether you want to trade this system or not, just pick 2 or 3 stocks on your watch list. Any stock, doesn't matter. And look at the weekly chart and look at the swing lows and see how many times you can find this pattern over and over and over again, right? You had right here at the end of 2019 or at the end of 2018, that was the bottom of a bear market, right? There was a bear market in the 4th quarter of 2018, had a nice reversal pattern, made a nice little income trade, right? Maybe you sold right here, but look, you got right back in above average volume, made a little bit of money, then it went flat for a while. Now here was the mammoth. This was actually the first trade I took post coronavirus bear market, right? When the market really reversed. This was the very last week in March, I believe, actually kind of maybe not the last week, but you're talking Amazon here. Look at this skyscraper volume. You have a 50 million shares traded of a $1,800 per share stock. I mean, that is actually probably should run the math on that, but you're talking a lot. You're talking a lot of money right there. You're talking billions and billions piling in, right? So I see this skyscraper. It fulfills all the rules. This was the first trade we took, and it was a good one because, you know, we bought at the open the following week of the reversal. So this was the reversal week. I wait for the week to close. I buy it the following week. I'll go through money management rules here in a minute. And then we literally rode this all the way up, right? So when I talk about leaving your emotions at the door, again, I want to talk about how many of you really missed out on a lot of the rallying that happened last summer because you were just waiting on the second wave, or you were waiting on the second leg, or, you know, maybe your feelings were hurt because you just got absolutely slaughtered right here, right? But the rules kept us in. Even though, trust me, you know, inside I was like, oh, I want to take profits right here. I want to take profits right here all along the way. Like, you have to follow the rules. And I'm glad I do, because the more I follow the rules and versus, you know, my opinion on when I think the market should top, I make a lot more money. We actually got stopped out on this red bar right here. Okay, so we entered right here. We got stopped out on this red bar right here, but look, the very next week, we got another reversal, we got right back in. And this was a much smaller trade. I think we netted like 4% on the trade. And then you got another one right here. And then it went sideways for a while. I actually did not take this one. I took this one and I took this one because this one, it kind of looked like it was in an obvious trading range. All right, the system actually told me to take another pick this week. But rules are rules, right? So this is just, I think, a great example just to show you not all are massive winners, but you never know which ones are going to be your massive winners. So when you have follow a rules-based approach on trade management and money management, you can take advantage of that, you know, if it happens a few times a year, okay? So here's another KBH home, and I really, really like this example, even though this might be a little older, but this was one we took, KBH home. This is the weekly chart. You had a nice downtrend, right? And then you had a nice reversal. And why I like this example is look at the volume in this pullback, and then look at the giant skyscraper, right? The volume just worked. It stood out, right? We took it. It took a few weeks to get going, and then it just absolutely took off, and we exited here. Now, did we get in right down here? No, that's silly. Did we get out here or here? No, but we caught the meat of the move, and I'm glad we got out here because, right, then, you know, this stock went from $40 to $9 in 4 weeks. Okay, I do not want to be sitting through that. Just because it has a reversal doesn't mean I'm going to hold it forever. I'm going to follow my trade management rules, and the trade management is going to tell me when to get in. That's going to tell me when to get out. Okay. So I like this example as well, TRTN. And why I like this example is because this is a little known shipping container stock, right? But the system said this was the one to enter, so we did, right? So you had a reversal right here. You can see it, above average volume. You got a pullback. This undercut the previous 3 weeks. Rule number 2, closed up, above average volume. All the rules are there. Now here is a great example of we entered at the open at the following Monday, right? And I had a stop loss down here. Our stop loss came within 3 pennies of getting hit. It was that close. But so instead of saying, this is just going to hit my stop anyways, right, I'm just going to go ahead and get out. Rules are rules. Rules kept me in, so the stop did get hit, and then it turned around and it ended up being a nice swing trade, right? So again, I talked about rules. Rules really made us a lot of money on Amazon, told us how long the rally was going to last. Rules also told us to not adjust our stops, not do anything. We got a plan. We're going to stick to it. And obviously, there are some times where your stop will get hit, but you know, then you start to add bias. Then you start to add discretion. And the more discretion you add to the process, I can guarantee you over time, the less better you'll do, unless you are an absolutely master trader, 1% in the 1%, right? But most people, even including myself, I love to follow rules, right? So those are the examples. Now, here are the money management rules for you to look at, right? So I have tested, by the way, many exit algorithms, right? And I like to keep it simple, right? I like simple trading systems. I like simple money management rules and risk management rules, something that's replicatable, something that I can teach, and something that you can do yourself. But here are the rules, right? Again, yeah, write this down, right? So since it's an end of week close, I'm going to enter at the open on Monday. So I'm going to do my homework on the week and I'm going to buy at the open on Monday, right? I'm going to sell half at 8%. So my target one, so if I enter Apple at 100 bucks, when Apple hits 108, I'm going to sell half, okay? Now, once I hit that 108 target, I'm going to let the rest run until it breaks the 50-day moving average. So I'm booking partial profits, and I'm giving the stock an opportunity to, if it wants to be a bigger winner, I'm giving the stock an opportunity to ride the moving average, right? Because growth stocks do find support the moving average in a reasonable trend, right? And that, because that rule allowed us to stay in Amazon because it continued to stay above the 50-day moving average, okay? And then when the second half breaks the 50-day moving average, I'm out. I also have, right after I buy, I put a max 10% stop loss on the trade. I'm not going to risk any more than 10% on the trade. Max 10%. So target 1, 8%, max stop loss 10% on the whole thing. But once I hit target 1, I'm going to let the rest run, right? Because these are trend following rules, right? So we're buying strong stocks, so we want to have a trend following mentality because strong stocks continue to trend and they usually trend longer than expected, okay? So can you do this? Can you spend 15 minutes per weekend to find these setups? Or how about even place a market order before Monday at 9:30 or right at 9:30, right? We just buy at the open, market price. I'm not going to penny pinch over, wait 5-10 minutes. Like I'm just, again, you're adding discretion, right? I'm just buying at the market open. You know, can you set up automated orders? And this is something we haven't quite discussed, but this is just a snapshot of Street Smart Charles Schwab. Right, how you can set up bracket orders. That way you can say, okay, I got filled at 9:31, right? And so I'm going to immediately go around and I'm going to put my profit target. I'm going to put my stop loss. I'm going to hit review and place order. And then I'm going to walk away. I'm going to walk away because whatever the stock does in between these two prices, your target and your stop loss, doesn't matter to you, right? You have an objective bracket. You have an objective rules-based trade plan. So it doesn't matter if it gets to 4 or if it gets to -5, you got your targets in place. You don't even need to watch it until you get that noise on your text message or on your email saying, hey, your profit target got hit. Then you can start to pay attention, okay? But it's really designed to automate it. Again, I think most of us would attest and agree, the more you stare at a stock, the more you want to do something with it, the more you want to sell it, the more you convince yourself that it can't go any higher, so I'm going to book some profits now, right? The best thing to do is just to automate that process. And I understand sometimes it's easier said than done, but also you automate it, it's going to take care of itself for you, right? Now, the great thing about this reversal pattern right here is that you can easily use it on all major indices as well, not just individual stocks. So this is the bear market of last year. I think we all remember this, right? This is the S&P 500 weekly chart. Now, I had a system that told me to move to cash right as it was breaking down right here, so I felt pretty good about that. Sat in cash, and then look, all of a sudden you get a nice reversal bar on the S&P 500 right at the low, like the week of the low. So then you can just get in right at the open on Monday. And there was a huge rally. There was a huge rally that went all through until the end of really January of this year. And then, you know, some of these growth stocks have pulled back a little bit, which is completely normal. But a reversal bar would have told you where to get in the bottom of this bear market. Now, in 2018, there was a fourth quarter bear market. Now, there wasn't a reversal on the S&P 500, but there was a reversal on the NASDAQ 100 QQQ. All right, look at this. You had a nice 25, I think it was a 25% bear market, and then boom, you get a reversal. There was a huge rally in 2019, okay? So this is a great way to not only time the bottom of stocks, this is a great way to buy pullbacks in the overall market as well, all right? Now, there actually wasn't a reversal at the bottom in 2009 in that bear market, but I had another rule that got us in 3 days, 3 or 4 days after the bottom. But look at this. You had a horrible bear market from the tech bubble from 2000 to 2003. And this was at the end of 2002. Look at what happened. See this reversal bar right here? It's funny how these pop up again, again, and again. So 3 of the last 4 bear markets, if you would have just looked at 3 or 4 indices, you'd have seen a reversal bar right at the bottom. Okay, very, very interesting. So so I send these out. I send out these Monday morning alerts. You know, I do some of the heavy lifting, but this is what we've done over the last 2 years. I've sent out 89 Monday morning trades because we buy on Monday morning. We have a 64% win ratio. The average trade can last about 4 weeks. Right? It can last, 2 weeks, can last much longer. I prefer them to last longer because that means they're going up. Could have about 4 to 8 trades on at a time, right? Again, this depends on the overall market. The more trades I have, that means they're working and the market's going up. The annualized rate of return on these is, if you put it into a portfolio, the annualized return is 42.5% per year over the last 2 calendar years versus 25% per year for the S&P 500. So we almost, not quite, almost doubled the market performance, spending less than 20 minutes per week. Oh, and by the way, our drawdown was almost nothing compared to the 35% drawdown of last year, right? We just completely sat in cash and waited on that reversal and signal to happen. So it's done pretty well. And we also we also trade options as well. So I have traders that I work with. Some trade stocks, some trade options, some trade both. I trade both. But, a lot of times what we'll do is we'll take this system, and this was the CrowdStrike example. We'll enter the stock at 60 and a call option simultaneously. So it's meant to really be a complement to the overall system. Now, on the options, we're going to sell the options much quicker at a 60% gain, and then because of time decay, and then we're going to let the stocks run. All right, so we got stopped out for a nice gain on CrowdStrike, and then of course it went higher. But I mean, that's just a part of trading. Okay, so trade options, trade stocks, trade them both. Now, over the last 2 years, this is what the option, if you're an option trader, this is a standalone option performance, right? And so if you would have taken every trade, bought just one option contract, started with $1,000, after 2 years, you would have had $7,202. Now, I don't know where you stand. I don't know what size account you have. So, I just like to show several examples. If you were to buy 5 contracts on every trade, you would have needed a minimum of $5,000 account to start. But after 2 years, you would have had $36,008. Okay? So this is how much you would have ended with. This is how much you would have needed to start with, depending on the number of contracts that you want to buy. Now, obviously, when you're trading options only, I always say know thyself because you're dealing with leverage, right? Anything can happen. But this is what we've done over the last 2 calendar years. So rules-based systems are really designed to take the emotions out of trading. Okay. I hope I've really driven that point home. I love rules-based systems because they're designed to give more freedom. The smart money uses them because they work. I read something the other day that's like 75% of the orders on the New York Stock Exchange are automated orders, right? They're automated hedge funds, and the reason they are is because they work. They are smart in taking the human element out of the equation, and that way, opinions get moved out of the way. I like rules-based systems because they keep drawdowns limited. I am a younger trader, but I am also conservative. I do not like large drawdowns, right? I believe in keeping drawdowns low, and that way it's very important, especially with the traders I work with that are of retirement age or close to. I believe it's very important to protect what you work your whole life to grow, right? So we want upside potential, but we also want to make sure that we protect our downside, just like we did last year when the market sold off 35% in 4 weeks. But with rules-based system, it allows trading to be a money-making business and not a hobby. And I think that's very, very important. If you're going to follow a rules-based approach, you really got to get out of hobby mode and put your business hat on, right? You got to follow a set of rules, right? I mean, if you still get super excited every time you hit the buy button, just you get that euphoria. It's just you want to overtrade, you want to buy, kind of a gambling type mentality. This rules-based systems are going to be very hard for you to stick to because you are still looking to be entertained versus making money. Rules-based systems are really all about turning trading into a money-making business and getting out of hobby mode. These are just a couple of testimonials from a couple of traders I work with. Scott said, I sold half at 8%, been rolling the remaining ever since. Currently up 198% on closed, position 220 on open, tremendous trade. Now he is talking about he bought the stock, sold half at 8%, and then he let the option run, okay? Now, Richard sent me this a couple months ago. He said, I dropped 20K Sunday on a weekly reversal for Sportsman Warehouse. It popped 44%, sold it for a crazy gain in 2 days. Love the reversal strategy, win ratio of 91.1% on all my trades to date since it started 3 months ago, 40 trades So he's actually beating, he's actually beating me, and I think that's phenomenal. I love it when the student beats the teacher. This guy is just rocking it out, right? 91% win ratio on 41 trades. That's a pretty amazing feat right there. So if you want to learn more, right, if you want me to do some of the heavy lifting for you as far as, how to really scan for these, right? A little bit more talk about risk management. I have all that training. There's only so much I can fit in 45 minutes. You have the rules. You can go out there and find these stocks yourself. You have the rules. You have the system. You have the money management rules. But I like to make it a little easy because in this weekly reversal course, I give you the scan codes as well, right? So instead of trying to figure out what preloaded scanners to use, maybe in your brokerage account, I actually give you the scan code for stockcharts.com, and I have some other scan codes on other platforms to make it super, super easy. That way you can, have a list of 10, right, on Sunday, and then I'll show you how to narrow that down to pick the best one. Right, so I've shown you the scorecard from 2019 to present. On average, if you would have taken every trade, you'd earn about $500 a week in income. That's on average, right? Takes 20 minutes a week to execute, and very, very simple. 3 rules for every trade. Now, so as a part of the weekly reversal course, while you're training, I love to teach people how to fish. That way, you can really understand the system, and then you can do it yourself. But if you want me to do some of the heavy lifting for you, in addition to the scan codes in the course that I'm going to send you, I send you the weekly reversal alerts as well. So every Monday morning before the market opens, unless the market's just absolutely being ugly, I'm going to deliver a 1 weekly income alert prior to the market open every Monday with very specific targets, right? So you can see DNK. This is just an example. At the market open, estimate $50. Target 1 is 54, which is 8%. Stop loss is 45, right? And then I type up a complete markup in charts on, why this is the best one, and, very, very specific entry and exit. So not only you get the course with the scan code, you get the rules. And just, if you're kind of looking at this from, an income standpoint, you can see right here that, over time, if you would have taken every trade and put in $5,000 in each stock trade, you would have earned about $193 per week. And then if you would have added the options, and this is the 5 contract option, so you'd have needed $5,000 to start with, an extra $306, which gets you to $500 per week. That's over the last 2 calendar years. That's what you would have done. So maybe you trade more. Maybe you put $10,000 per stock trade, right? Same risk on the options, and then this is what you would have earned per week. So this is the 2019, 2020 numbers. You'd have done very, very well. So just kind of depends. Some people don't need the income. Some people want the growth. But I just kind of like to break it down for you to see, which one, what the performance was of each one. That way you can make a decision. So I want to recap everything you're going to get. You're going to get the complete weekly reversal course, which includes the scan codes and how to use them. You're going to get the weekly reversal alerts. So I'm going to do some of the heavy lifting for you by sending you the ones I find. And that way, as you're learning, as you're going along, you can see it so you can learn and fish for yourself. Now, as a bonus, every Tuesday morning I put out swing trade setups video, and this is an extra. If you like to trade more than once per week, I have put about 4 or 5 ideas out here, usually more high octane, aggressive growth stocks, like Riot. I think Riot was a perfect example. I sent this out to my list, Riot, and I had no idea Riot was going to go from 4 to wherever it is now, 50, 60. You know, I didn't know, but he had a nice cup with handle pattern. And I said, it's a beautiful, and this is a snapshot of an email I sent out. It's a beautiful cup with handle with a potential buy above 4. I think the very next day it broke out. We got in and did very, very well. This stock really, along with a couple other cannabis stocks, really made my fourth quarter last year. So it was very, very nice. But you know, we're looking for some high growth stocks. In addition, as an extra bonus, the first 20 members are going to get free options alerts for a year. So not only do you get the stock alerts Monday morning, you're going to get the option alerts to really complement that as well. So recap everything you're going to get: the weekly reversal course plus the scan codes, the weekly reversal alerts, the Tuesday morning swing trade setups blueprint, and you're going to get the option alerts free. And this is only available for the first 20. So it really is a huge value, guys. You know, I'm really putting my best foot forward, looking for long-term relationships here. So if all this did was really add that additional retirement income, would that be worth it? Or maybe just finance a few trips on your bucket list each year, right? I like to travel. My wife likes to travel. Or what if it allowed you to retire more comfortably than you and your family thought possible? Would that be worth it? Okay. So the weekly reversal course and everything that I talked about is included. You can get for only $267. This right here is the order form. So this is an annual subscription. Okay, so you can stay as long or as little as you like. Okay, so if you want to stay on $267, that will cover you 12 months, and you'll get the option alerts free. Pretty no-brainer. So right now you can go to the tradersplan.com/checkout-SWLNT, and I believe Anna just dropped it in the chat box. So you get everything you see, everything that's included. Now, I understand the market's, you know, really being rough right now. And, you know, what I usually like to tell people is like, look, even though the market has really pulled back, you know, the last 5 to 6 weeks, like we are one day away from a new uptrend. And the reality is, and I've studied trends in the market indices for years, strong trends come out of ugly markets. Think about last year. Think about we saw the strongest rally in the NASDAQ we've seen in 20 years coming off that sell-off at the bottom in March. So, you know, but I understand that sometimes you try a new system, maybe it's for you, maybe it isn't. So what I say is trade it for 30 days. And if it's not for you, you can just send me an email and request a full refund. You just have to send me a snapshot to prove you've taken at least one trade. Okay, just take one trade and send that to me, and then I'll give you full refund if it's within 30 days, right? If it is or isn't for you, okay? This says 2-part guarantee. I just meant to say 30-day guarantee right here. But that should make you feel pretty good, right? Especially given the choppiness in the market. So kind of recap everything. You can go to thetradersplan.com/checkout-SWLNT. You get the weekly reversal course plus the scan codes. Brand new, by the way. This is brand new and updated. The alerts, I'm going to send you out the alerts. The Tuesday morning swing trade setups video plus option alerts. Everything that's included. Huge value, $3,688, $267 today. Okay.
Hello, my fellow traders. How are you feeling today? I'm Dan Passarelli, and I am super excited to be with you right here and right now. You've been listening this whole time, so I trust you can hear me. I'm honored to have this opportunity to speak with you about the key way that I generate cash. I do it with a simple technique that anyone can use. Not only is it a way to generate greater income, but it works in all market conditions. And I have cracked the code on how to do it. Before we get started, I need to point out options are not for everyone. You should read characteristics and risks of standardized options before trading. You can get a copy of that by calling 1-888-OPTIONS. So here's what we're going to do together today. This is my promise to you. I am going to share with you how it's possible to generate cash consistently, over and over, while lowering your risk, even in stocks that are headed lower, so you don't have to rely on buying and holding. And at the end of this presentation, I'll share how you can move forward and follow the exact same steps that I use every day to do it. Is that a fair deal? Does that sound great? Give me a yes if that sounds just as great as I think it is. Fair deal? Yes, says Trader. Yes, says Will. Yes, says Ted. Yes, says member. Wow, you guys have some interesting names over here. That's great. And by the way, I love a lot of participation because that sure helps me understand that you're paying attention. And I'm super excited about this, and I hope that you are too. So let's make this super interactive. Now, also, the only way to make a change is to follow through and take action. You're the one in control of your future wealth. I am going to help you as much as I can, just like I've done with our most successful traders. And in order for you to get as much out of this as possible and be able to take the next steps, I ask for the next hour, 45 minutes or so, turn off your cell phone. I know, crazy idea, right? There actually is an on-off button on that little machine you carry around with you all day. Use it. Close all your open tabs. This is about you. This is your time, and allow yourself to give this your full attention. Also, to help keep the focus, I'm going to hold all questions until the end of the presentation. So write them down, save them for later. I will answer them. The idea is not to buy and hold, praying that your stocks go up. It's to tap into the income source already in your portfolio to generate cash consistently over and over while lowering your risk without being handcuffed to that old-fashioned simple buy and hold and pray strategy. And the best part is, the way it works is Wall Street traders actually give you money every 2 weeks, independent of your stocks. And they actually help you sell your stocks at a profit in the process. And the only way to tap into the stream of income is through my smart income system. I do this every day in my own personal accounts, and so can you. By the end of this presentation, you will be ready for buy, and hold, and hello to a smart investing system. The first thing you need to know is that if you haven't been getting the results you want, it's not your fault. The buy and hold strategy simply does not work anymore, at least not in its traditional form. With all your wealth tied up in stocks that are at the mercy of the market, there's just too much risk, and it takes too long. And those stocks, they're controlled by the big players, forces way bigger than you. What if you could make real cold hard cash right now, not by risking more by buying more stocks, but actual cash out of the investments you already have without adding any risk, and in fact lowering your risk while increasing your profits? If you could do that, wouldn't that make a lot of sense? I struggled with my investing for years, trying to find better stocks to buy, set stop losses at the perfect levels, using complex indicators, and ultimately buying and holding and waiting until I discovered how to tap into the investments I already had to make consistent low-risk cash in all market conditions. Once again, my name is Dan Passarelli. This is a pictorial representation of just some of the companies I work with. I'm a former member of both the CBOE, Chicago Board Options Exchange, and Chicago Board of Trade, now part of CME Group. I'm the author of 2 of the top option trading books, The Market Taker's Edge and Trading Option Greats. I'm a regular contributor to Bloomberg TV, Fox Big Business News, BNN for those of you folks from Canada, and lots of other news publications. And I train traders just like you, literally all over the world. Warren Buffett said, if you don't learn to make money while you sleep, you'll work until you die. Warren Buffett also figured out a way to consistently generate cash. And in fact, one of the ways he does it is the exact same way I'll share with you today. And other great investors use this exact technique you're about to discover too. In fact, it's sort of the big secret in the industry. All the top money makers do this one simple thing. Mark Cuban does exactly what I'll share with you today. In fact, if it wasn't for him using this exact technique to protect his shares when Broadcast.com collapsed during one of the previous financial collapses, he wouldn't be who he is today. This technique literally made him rich during a financial crash. Jim Rogers does this. John Cawiezell, who I think most of you are familiar with, famous dude, formerly with Goldman Sachs, who leads our daily group coaching meeting for our elite traders where he reveals the top trades in the market every day, also uses this exact same technique. And by the way, at the end of this presentation, I'm going to share with you how you can get complimentary access to that class for a month to get John's trade ideas. And the list goes on. Rick Santelli does this too, and so on. These traders are the best of the best. They use this exact simple technique to have the rest of Wall Street traders pay them regular payments every 2 weeks, just like I do, and just like I'll share with you. Here's how it works. What if you could get regular cash income, kind of like a paycheck, every 2 weeks from Wall Street traders, and they help you sell your shares when the market goes up and buy them when the market is down? Would you be interested in learning more? Of course, right? Well, I sat down and mapped out exactly what this would look like for you on a typical stock. This is part of a trading system that, when followed closely, both pays you cash and helps you do what's called scalping stock. That is, buying stock when they're at low prices and turning around and selling them at high prices. And it's all contractually arranged in a real Wall Street traders on the other side of that contract. I'm simplifying this for you. Imagine you own this stock. The first step in this system enables you to create a contract in which, in this case, you'd get paid $138, and the Wall Street trader you made the contract with watches your stock, and you get to sell it to him if it goes up a lot. So far, so good, right? The cool thing is these contracts only last a certain period of time. In this case, 2 weeks. After the 2 weeks, if you don't sell your stock to the trader, the contract ends and you get to keep that money. You simply make another contract, and in this case, we'll say you collect $127. Then, after 2 weeks, the contract expires, and you make another contract with the trader. There are a number of professional traders who are willing to do this. So it might be the same person or it might not, and it doesn't matter, as long as you keep getting that income, right? So now, in this case, you collect $131 for your contract this time. Your cash, which is riskless, by the way, right? It just keeps adding up. Now, you might be thinking, all right, this sounds crazy. Why would this professional trader make this contract with me? Doesn't he lose money? No, that is the beauty of this. The trader who has the contract with you is hedged. He's protected and doesn't have to worry. And in fact, that's why when your stock does go up too much, he's able to buy the shares you sell him at the agreed upon price. So now when the stock goes up above a certain price, you end up selling your shares at a good price. Everybody's happy and you're making money. Then after 2 weeks, that contract expires and you make another contract with a trader. There are a number of professional traders who are willing to do this, and it might be the same person and it might not, and it doesn't matter, right? Now, the next Monday, when the market opens, guess what happens? Cha-ching, it's payday again. Your new contract gets you $152 this time. And here's what happens next. Now the market goes down to the level at which the professional trader has agreed you can buy back the stock from him at this low price. And again, he's hedged, so he doesn't care. He's glad to sell it to you, and you're really glad to buy it. So here you'd have bought your stock back for a low. And then the next day, boom, payday again, receive $123, and the list goes on like this. It goes up a lot. And you sell your shares by assigning your shares in the contract to the trader. Then write another contract, collect $154 this time. And by the way, all these contracts are very common standard transactions. You don't need a lawyer or notary public or anything crazy like that. These simple common contracts, they just require the simple click of a mouse. All right, let's see who this type of trading is for. Can you click a button that says place order? Give me a yes. As long as you can follow a simple system and click a button that says place order, it's going to be really easy for you. Can you do that? Can you click a button that says place order? Trader says yes. And Ted says yes. And Michael says yes. And Lori says, if I close my eyes. Right, exactly. Will says yes. Jennifer says yes. Yeah, come on, everybody. Make this interactive here, right? Let me know that not just that you're paying attention, but you're freaking excited like I am. Member says yes. Janet says yes. So look, then let's say it goes up a lot, right? Then it's just simply following along. After this expiration, you collect $149. Then when the market's lower, you buy back your shares. Then you collect $117 this time. Then $123. Then you sell high. Then you get another paycheck, right? Then you get a paycheck, 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 and it works. Smart, right? Are you getting this? This is super easy. Now, I want to call your attention to something. This is a 6-month chart. If in the beginning of this, you originally own 100 shares of this stock when it was at $170 a share 6 months ago, how much money could you have made on that 17 grand? Well, with the buy and hold and pray strategy, you could have made a little bit. But then again, it could have gone down and you could have lost a little bit, or maybe a lot. But what about collecting smart income? These paychecks, as I've been referring to them as, how much cash can you bring in using this system? And that's the thing that really changed my life when I discovered what was going on with this. See, I came from the trading pits in Chicago. I knew a lot of people who use this technique. And when they first shared this with me, they described it to me and said, yeah, Dan, you know, it's like limited insurance. And I was like, what? What are you talking about, limited insurance? I didn't get it. Limited insurance? Like, I mean, it's obvious that this is an incredible way to tap into income in your existing portfolio that you wouldn't have access to without this system. Like, duh, that's instantly clear. But limited insurance, I don't know, it seems strange. How is generating $138 insurance? But then it hit me. It's not about the $138 or the $152 or even the scalps you lock in by buying when it's low and selling when it's high that this system enables you to do. The key to unlock the real power is the system itself. If I own $17,000 worth of a stock and I collect $138, $127, $131, and so on, sooner or later, I've collected enough cash to cover losses if the stock goes down, and even if it goes down a lot. Once I was invited to be a speaker at an investors conference, and someone came up to me after the talk and I shared with him this system. And he said, "Oh yeah, I've been doing this for years. In fact, there's this one stock I own that I've been doing this on for almost 10 years. And in fact, I've collected more cash from writing these contracts than I spent on the stock." He effectively, at that point, owned the stock for free because he collected more money than he spent on it. Now, that is the best insurance you can buy. No risk. This is a system in which the sooner you start using it, the better, right? Are you feeling me on this? Like, do you agree? Does that make sense? The sooner you start using this, the better? Yes? Give me a yes. Will says yes. Kevin says yes. Janet says yes. Amen says yes. Okay, cool. Right. Right. Because it is, isn't it? Because the longer you use it, the more it adds up and protects you the longer you use it. So like it's dumb to wait until tomorrow. Now is the best time to start, right? So I've been using this for years. And this is a recent screenshot from my IRAs that I manage. This 2-week period netted me about what? 465, 373, 396, 317, 561, 469, like $2,600 or so. This can be a typical 2 weeks for you. Maybe not every 2-week period will work out just like this. There'll be some where you have to manage your trades and make some adjustments, but I want your mind to start working with me, right? That's important. But look, the problem is a lot of people make it hard. I've heard every excuse in the book for inaction, for status quo, for letting opportunity pass you up, and frankly, it's laziness. I've heard, "Oh, gee whiz, it's too hard. Oh, it's too time consuming. I don't know how to do it." Yet, I say, I don't want to make thousands of extra dollars a month. All right, I never heard that one, but like by not getting started with this right now, that's basically what you're doing. Every day that goes by, you're leaving money on the table that should be yours, right? So I put everything you need to know into one simple step-by-step smart system that shows you exactly what to do. The exact steps to follow so that you can do exactly what I do in just 5 minutes a day. I have made it so you cannot mess it up. This is Kat. When she first came to us, she didn't have a plan, and that showed in her results at the time. She went on to become one of our top students. She made the commitment, and it is really working for her. Look, anybody can do this. This is the system I created for our traders. There are just 5 simple steps. First, we simplify how to find these trades. Second, we screen them so we're making the most of our time and money. Third, we just follow the checklist to pick the best choice so we're always making the most and consistently lowering risk. Fourth, we make sure we're getting the best results when we actually make the trade. And lastly, and this is the part that people stress about, they struggle with, and frankly mess up the most if they're just trying to wing it, is managing the trade. This can and should be the simplest part of all of this. Here's how this works. The first thing to know is this system uses options. There are 2 types of options, and we use them both in this system. There's calls and puts. So a call option is a contract with 2 parties. We call one the buyer and one the seller. The buyer literally pays money to the seller. The seller gets money deposited into his or her account. And if the stock goes up, the call owner buys stock from the call seller at a high price. With puts, it's a contract, two parties, a buyer and a seller, and it's in some ways the opposite. The put buyer pays money, deposits money into the account of the put seller, and if the stock goes down, the put buyer sells the stock to the put seller. The put seller gets to buy at this lower price. Now, all these contracts have an expiration date, so they don't go on forever. It's only a finite period of time. And you may buy or sell the shares, and if the option expires without buying or selling the shares, that's just as good. You get to keep the money. This becomes, when you're an option seller, it becomes an amazing way to control your financial future. So the question you're probably asking right now is, well, exactly how do I use options to tap into this hidden income source that is sitting there in my portfolio? What do I need to do to get started? And what do I do after that? Well, I've been referring to this as a paycheck, right? Just like getting a paycheck anywhere else, you want to make the most efficient use of your time and resources. I mean, what's better? A backbreaking job that's stressful, miserable, costs money to travel to, pays practically nothing? Or do you want a paycheck that pays you a lot for your time and your other resources you invest, right? Whether we're talking about trading or a job, the answer is the same. The end goal is to have a good life, man, to have free time, to have safety, to have an income stream to live comfortably off, to have low stress in your life. There are 5 steps in the MTM Smart Income System. Right now, I'm going to focus on step 1, the simple trade candidate identification formula, because that step will help you move the furthest, the fastest, immediately. If you don't do this part right, the rest doesn't matter anyway. So let's dive in on this step so you can leave here today being able to find the best trade candidates and avoid the bad ones, and you'll be able to hit the ground running and you'll be dying to take the next step. Make sense? We've got 4 sub-steps to step 1. Identify your objectives on a currently held stock or ETF. Verify the earnings date is after the front expiration. Verify the offer is no more than 10% greater than the bid. And evaluate the trade makes sense based on objectives and strike proximity. Let's break some of these down. Remember, this is not the buy and hold and pray strategy. It's different. They're different objectives. When you have a stock in your existing portfolio, you can have one of 2 objectives: skate or trade. Here's how they work. First, there's a lot of numbers here. Don't get hung up on that. I like to make things really simple for our traders in all our classes. All you have to look at is one number. In this example, with the stock at $97.22, you could have sold the 101 strike call. See that? Just that one number. So the strike price, or the sales price in the deal you make with the Wall Street trader, is struck at 101. That means if the stock is above $101 when this contract expires, that trader will buy the stock from you at that price. So you make $3.78 a share, or $378 of money, because you owned it at $97.22 and sell it at 101. All right? So far, so good, right? Yes? And maybe you want that, and maybe you have a different objective. This example was the trade objective, meaning trade out of the stock by taking a profit. Now, these are the exact same tactics being used, but with a different objective. This is the skate objective. Now we look at a different number. 107 down here. See that? Don't even bother with the numbers on the screen. Just 107. That's the paycheck. That's how much you collect, because these options contracts are on 100 shares of stock. That's $107 of money. $107 on a $9,722 investment is a little over 1%. And there were 2 weeks until expiration when I screenshotted this account. Are we all good with this? I mean, geez, man, like, are you loving this? Let me show you this, and you're going to definitely be loving it. Now, again, the goal is not to do this once, it's to do it over and over again, and they call this annualizing returns. We were just looking at owning 100 shares at $97.22, or let's just round that to $10,000. If you have a $10,000 investment, and if you were to make a little over 1% every 2 weeks, and now I want to be clear, you will not make 1% every 2 weeks. Sometimes you might collect as low as 0.65%, sometimes as much as 1.5%. And sometimes you end up selling your stock at a high price if it rises, and sometimes there are other strategies called adjustments that come into play. But I want to share with you what an annualized return looks like. Opportunity one, a 1% annualized return comes out to $214 a month on average. That's a paycheck. Maybe a part-time job paycheck, but a paycheck. Some nice side money, right? A couple nice dinners each month, or an extra vacation this year. Opportunity two, maybe you want to grow your long-term investments or your retirement account faster. This could be all on one stock, or it could be you're using this method on a few stocks you own. This is a $27,820 annualized return. $27,820 is like a paycheck from a full-time job for some people. Opportunity three, some people have bigger investment accounts and they want to grow them by adding cash and lowering their risk. That annualized return in this scenario comes out to $278,200 a year. Now, I said this before and I'll say it again just to be clear. We're simplifying here, and in some ways oversimplifying. There's some 2-week periods in which you collect more or less than 1%. Some where the stock rises and you get to sell at a higher price, and some where you do adjustments to maximize overall returns. The important thing is for your mind to start working with me and being open to possibilities. We also want to verify the timing on this contract. We have some control over when it expires. One thing about trading is it's about consistency, consistent income. Nobody likes surprises. So we like to find the riskiest days and let other people have that risk, and we sit it out. Make sense? That's how we're able to be consistent. We plan our expiration date around any known event that can add risk, like earnings announcements, maybe Fed meetings, or if we're talking ETFs, for example, and so on. And we simply remove it from the equation. Let other people take the risk, and we will focus on consistency. Then we evaluate that the trade makes sense based on objectives and strike proximity. The makes sense factor is a simple yes-no test of whether the potential trade candidate should even be traded or not. Here are 2 examples. The top one is the one you saw earlier. And look, getting paid $107 on a $9,722 investment, or a little over 1% over a 2-week period, like that makes sense. There's no rational person who would tell you otherwise. But look at the bottom one. A trader would collect $8 of cash. That's just too small an amount. And again, you want to do this to tap into the consistent cash flow in your portfolio. You want to make life easy on yourself. Make sense, right? There are 2 metrics that are essential to focus on here, ROI and COI. And you can see the ROI you can get with this strategy. I just shared how powerful it is to get cash income over and over while building up insurance, as well as selling high and buying low. But COI is actually more important. In this market, what's the cost of doing only what you're already doing, not changing? Is your account where you would like it to be? And if it is, that's great. You made a choice and you made it happen, and that is what makes great investors. Trading is psychological. You learn a lot about who you are. You know, are you decisive? Can you make decisions? Are you afraid to make an investment? Are you afraid to invest in yourself? I sure hope not. Fear's the enemy of traders. Invest fearlessly. I mean, Warren Buffett said the best investment you can make is an investment in yourself. How many people believe that? Do you believe that? Give me a yes if you believe that. Warren Buffett said the best investment you can make is an investment in yourself. Amen says, hell yes. Janet says, absolutely. Lori says, for sure. Kevin says, yes, all caps. Will says, definitely. Right. Look, fortune favors the bold, right? It's important to imagine, to visualize a profitable future. If you look back 3 years from now and you can confidently say, I did it. I'm so happy. I generated a bunch of cash and my risk is actually lower because I'm more in cash. I really took the steps to make this happen for myself. I outperformed the market. What would those steps have to be? And when do you want to take those steps? There is a cost of inaction, and it's underrated. It's so important. But taking action can be life-changing. It is exciting. When you're writing these contracts and making the deal with the trader on the other side, when you sell at the high price, you want to get the best price. And when you have the skate objective, you want to collect the most you can. It's a balance. We as people in control of our own financial future wealth all have the same goals. It is my goal, and it's my goal for you, to make as much money as possible, which I'm pretty sure you want to. When you tap into this income source already in your portfolio and generate consistent cash flow from your trading without being handcuffed to simply buy and hold and sometimes pray, you no longer have to be at the mercy of the markets like some of those frustrated investors. Can you imagine having the confidence of knowing you can outperform in up markets as well as down markets, cranking out cash consistently over and over again? Man, that feels good, doesn't it? This is the MTM Smart Income System. Are you getting this? You can improve your trading greatly right now. It just depends on the actions you take. Can you make this happen? Well, let's talk about realistic expectations. How often can I find opportunities like this? There are literally hundreds in the market right now. If you don't take action on great opportunities, it's status quo. You're stagnant. ROI remains stagnant, and that painful COI continues adding up. Just wasting time and money, leaving it on the table. Are these returns common? Yes, I literally showed you screenshots from my real live money accounts. And studies prove the data. If you can identify the best candidates, set them up right and manage them, the sky is the limit. What if the trade doesn't work out? Each step is a step in a proven system. Work the system and the system works. This is the MTM Smart Income System. I want you to be able to trade consistently and confidently and have peace of mind about your finances, and I bet you do too. And guess what? Anyone can do this. If you can follow a simple checklist, you can take the next step towards beating the market today, and I'm going to make sure you're able to start today. This is just some of what you'll learn. Time-saving ways to easily scan the market for the top income trades. Where to get real-time data that identifies only the best trades. How to screen for value to make more on your winning trades. The 7 steps to selecting the strikes and expirations with the biggest payoff. How to manage bid-ask spreads for greater overall profits. How to use the complete system, including not just covered calls, but cash-secured puts, the recycle trade, diagonals, and a whole bunch more. And the rest is about management, how to recoup losses when the stock falls, turning losers into winners. Some of you do this already, One of the biggest problems people have is how to manage trades when the stock rises through the stock price, but I'll show you how that's so easy to overcome. And how to manage, adjust, and roll, because there's 3 M's in investing. Management makes money. Here's how it works. As soon as you join, you're going to get a username and password to the MTM Smart Income System. Starting today, you'll begin watching the 5 easy-to-follow online modules that literally lay out exactly how to generate regular, consistent income from your existing portfolio so you can grow your account faster, protect yourself better in down markets, and make it easier to start reversing any losses you may have. Now, just to be clear, this is not for someone whose philosophy of trading is gambling. It's just not that kind of strategy. This is to get paid over and over again with confidence and consistency. People who like to bet big and don't care if they lose, this is a totally different style of trading. This is also not for people who would rather spend time and money and endure losses to learn on their own over many years' time. How many of you have already been doing that? That sucks. This is the fast track. I'm giving this presentation now because there's never been a better time for this strategy. And it's also not for wishy-washy procrastinators, overthinkers, wishy-washy people who see a good investment, a great deal, but can't make a decision to save their lives. They don't make good traders, but that's easily overcome. Be decisive. Fortune favors the bold. This is for you if you want more consistency. You want to lower your risk. You believe your success is tied to following a methodology. You can follow a few steps, and you're willing to invest in yourself. It all comes down to return on investment. And I wanted to make sure that this investment is easy to recover fast so you can start profiting and growing your wealth quickly. This class lists at $1,999. And look, our folks who invested at that level, even if it takes a month or 2 months, I mean, heck, look, even if it takes 3 months to recover that investment, you're going to be doing this for the rest of your life. An income stream that you can follow forever, that can be life-changing. I shared with you my results. I mean, how much do you think that you can make in a 2-week period? I showed you just my IRAs only. It's $2,600 in that 2-month period. And as investors, like, we know this, right? We think in terms of return on investment. If you don't, you're going to have a hard time being a trader. I want to help fast track your success. And one thing I know is you're here because you want to drive results. And so for people that are action takers, I want to give you everything you need, not only to succeed, but to help fast track that process. And the best way I can do that is to give you a handful of bonuses that I know from training thousands and thousands of traders are exactly going to help you do that much faster. And so the first thing I'm going to give you today is the Options Impact video series. What this is going to do is, whether you're a new trader or you've been trading for a long time, I'm going to give you the foundation that you need in order to start building upon the techniques and systems that I'm going to share with you. With this bonus, you'll now have the fundamental education that'll show you the exact lessons from the years and years of trading I have in my background, so that you can have the same philosophy as me. I'm also going to give you this, and it's normally $497. This 8-video entry-level class, I'm giving it as a bonus, absolutely free, for people to take action today. And some of you might already have experience trading options, and maybe a lot, and that's great. You will take what you already are doing and do it better. Select better trade candidates, manage them better, apply the more advanced strategies in the system, and I'll make it really easy. This is a quote from Mark from Bellevue, Washington. Now he trades full-time and basically is a professional trader. I wanted to see if this works with him, and he loved it. He uses it every day. He says it's easy to understand, presented in a logical manner, and he uses it to grow his retirement accounts. So what this means is, first, you're going to get the MTM Smart Income System, also get the Options Impact video series. Next thing I know is, with training thousands and thousands of traders, is trading's a lonely, lonely game. And the best thing that I can do for you as a coach is to help you silence the voice of doubt you have. So I want to put you around a community of traders that go through the same struggles that you do. So for the next 30 days, you're also going to get the MTM community chat room where you can share trade ideas. Now, lastly, the biggest number one trait that I see between investors that are just here to have a little success and look around, and the people who want to start taking massive action because they want to start driving results inside their investing. The thing from training thousands and thousands of traders that I've observed is that hesitation is one of the worst things that could happen to you in the market. The real bonus is the impact that you can have on your family's financial freedom. For example, Mark Cuban is worth $4 billion. And look, we're not all at that point, but if you can use the same techniques as the world's top investors, I believe you can make a profound change in your life by starting right now. If all this did was give you the tools and confidence to have more financial security for you and your family, wouldn't it be worth it? So all these bonuses, this is a $2,793 investment opportunity. That's a total retail value, including all the bonuses that help ensure you'll be able to easily make this work. Those bonuses come with the MTM Smart Income System today, which is normally $1,999, but not everyone has $4 billion like Mark Cuban. So I'm going to make this really easy. Join right now for a small, easy investment of $347 by going to markettaker.com/smart. That's markettaker.com/smart. Market, like stock market, taker, like take what's rightfully yours, 2 T's in a row, markettaker.com/smart. And you'll get everything that I mentioned, all those bonuses for just $347. And I know some of you are new to the Market Taker family. You're just learning about all the traders we've helped, and you and I are getting to know each other here today. So I want you to have no worries whatsoever. So I'm giving you my 30-day, 100% money-back guarantee. If you complete all 5 modules within 30 days and you're unhappy for any reason, we will give you a full refund, no questions asked. This class is that good. Now, I want to give you one more thing, and this is the big one. I want to give you an opportunity for John, the ex-Goldman guy, to be your coach. For the next 30 days, I'm going to give you access to some of you access to the Live Advantage group coaching. That's where John goes inside the market with you every day. He gives you the top trade ideas every day, shows you how to set them up live real time. You're the first to know, as well as the management strategy. This is normally a $497 class for the month, but the first 8 of you to join us right now, only the first 8 to join right now at markettaker.com/smart, you will also get the big one. You will get John giving you trade ideas every day for a month. How many trades do you need to get from an ex-Goldman Sachs guy to cover the value of this class? Do you think if you had one winning trade that you could cover this class in just one day? So join us right now at markettaker.com/smart. That's markettaker.com/smart. Now is the time.
Hello traders, this is Alla Peters, Fibonacci Trading Institute. In this webinar, I will be teaching you how to trade institutional reversals with the Alpha Fibonacci system. But first, I would like to remind you, very important and required disclaimer. Every single thing you will see in this webinar on future stocks, Forex, Bitcoin options is to empower and educate you. None of it constitutes a financial advice. All systems shown as is. There is no guarantee of any kind. Every single student, every single trader on the planet who trades Alpha Fibonacci system for the last 10 years had never been paid for their testimonials and their results. And I certainly hope and pray you understand risks involved in trading future stocks, Forex, or any instruments. Let's start, shall we? In this webinar, I will cover about the system, system based on key institutional reversal levels. We will go over multiple day trading and position trading examples from future stocks Forex in current and prior markets. And you will see how alpha Fibonacci traders trade globally, as well as I will share a phenomenal offer I prepared for new traders. Briefly about myself, I hold multiple degrees. I speak multiple languages. I have a large family. I arrived to this incredible country 32 years ago with nothing, with newborn on my hands. Within first 10 years, I made first $1 million investing in real estate, stock market, investing in my own businesses. 2004, I was introduced to Fibonacci. It became fascinating. Witnessing market crash of 2008 shown me clearly. Market is alpha Fibonacci puzzle. 2008, I developed first proprietary strategy that remains the core of the system. Since 2011, I taught traders globally on FibonacciTradingInstitute.com, Fibonacci Trading YouTube channel, Fibonacci Trading podcast channel, as I have done this morning for the previous 4 hours. I live and breathe what I do. I have mentored traders from beginner to Wall Street traders how to trade proprietary system. I use my own system on my own positions. I present at hedge fund events. I can't wait for my next live presentation at the Global Hedge Fund event. So there's few pictures of few traders. Every single one of these traders invited me to their home, to their family. Every single one of these traders brings their wives, their parents, their children, how to trade proprietary system. And this is what traders trade. Ninja 8 or any platform, pure price for entry and alpha Fibonacci for exits. This is what system is based on. You will never, ever, ever need anything else. And if you will view next what played out in the live markets this morning and what playing out right now, it will show you very, very clearly the pure price holding the key on any instrument you choose to trade. The core of the system is institutional trend reversals and institutional trend inceptions on futures, stocks, forex, microcurrencies, mutual funds, ETFs, cryptocurrencies, any instrument you choose to trade. Let's dive straight to S&P, shall we? Let's take a look on S&P that holds 90% of US stocks for the last year. So you can see the power of the system from a year ago until instantly playing out right now. Here's S&P with the power of alpha Fibonacci system, you know, many, many months in advance where institutional reversal zone will be. So when price reaches institutional reversal in January 2020, what do you know many months in advance? Where institutional buy point will be 2200 level. So when S&P is selling off, you're protecting your investments, you're obeying alpha Fibonacci rules. You are not losing sleep, you are not listening to negativity and panic. You know where institutional buy points will be. And when S&P reaching key institutional buy points, and on March 23rd, the worst Thursday in many years, markets start rallying. What do you see on your chart? What do you start understanding? That market is flawless Fibonacci puzzle. The trading on the news is not an option. You knew this many, many months ahead. You love buying institutional reversal points. This is critical key level. Let me take you back to bullish points of entry on day trading chart during historical months, exactly a year ago. This is your little day trading chart, March 9th. Bigger the rally, bigger the crash. Bold pink line identifies critical alpha Fibonacci support level. Market keeps respecting this support. Market keeps rallying. But many weeks, hours, days ahead, you know, where reversal zone will be. This is S&P a year ago with alpha Fibonacci system. This is institutional reversal entry points. This is how March 2020 closed. There was no good news on the news. On the chart, market started institutional rally. With the power of alpha Fibonacci system, you buying at the ultimate bottom. This is S&P a year ago at 2200 level. This is S&P today, March 25th, 2021. What would your account look like if you are buying the bottom at 2200? The start of the vertical bullish rally. Would you sleep much better at night? Would you recognize that buying with institutions, buying institutional reversal points is the ultimate way to trade? That this time around, when price reached reversal zone, institutions kept buying pullbacks. This is the most important chart you start each morning with. If you think as institutional trader does, this is the only way to trade. But there is nothing in common between buying institutional top versus buying institutional bottom. Price reached historical highs. You knew this a year ago. Again and again and again. This is the power of the system. And this is a system in front of you right now on top day trading instrument in US. This morning in the trading room, all recorded on video, all posted on YouTube channel. This is the key bullish points of entry. Not now. This is junky retail selling pressure. But this is your historical levels, your historical highs. Do you understand the difference between trading at 2200 versus trading at 3900 level? When institutions holding positions, you are tested to the core. These are the most challenging market conditions. Managing these markets, which can last many months and years, is the most important part of your trading. Buying the institutional reversal at the bottom is a dream way to trade. This setting up on multiple other instruments, but you know what instrument you decide to trade. And that's the difference between S&P a year ago at the institutional reversal entry points versus this morning. But much fewer opportunities are now. Markets are very challenging. Obeying the rules is a critical key part of your trading. So this is one of my favorite people currently in the course, Theo, in the middle of the night in Australia. What does he say? He says, trading with those powerful institutional levels is going with the market flow of the smart money. This is winning a battle before it's ever fought. Because that's exactly how you trade. Before you ever place a trade, you know if you won or if you lost. So what would your trading be like if you knew hours, days, weeks, months, and years in advance? Institutional reversals and institutional entry points. Would your results be much better? Your results are great. You can see his posts on Facebook, reviews, as students outspoken all over the world about what and how they trade. Richard shares on our podcast channel how he struggled for 20 years, how he retired as a physical therapist. And when he heard my presentation, he signed up right away. And what does he share? He doubled his demo within a couple of weeks. And when he started trading live on November 9th, he doubled his demo account. Sorry, he started trading December 7th with 3,600. And as of January, his account was 11,500. As of February, his account was 18,400. Listen to his podcast. Do you know what this means? If Richard can do this in the worst market conditions, what can Richard do when market conditions will be spectacular? And what would Richard's account look like next year and next year? From 3,600 December 7th to 18,000. In the worst market conditions, Richard simply obeying the rules. And when you do, the skies are the limit. You will never, ever, ever need anything else. So the Alpha Fibonacci trading system guides traders to trade the markets only with institutions as a strategic Alpha Fibonacci chess on all instruments. Let's go to the charts in the current market, shall we? This is a chart from S&P from this morning with Alpha Fibonacci system on NinjaTrader 8. This is how simple system is. If you understand what institutions do, if you understand where we are currently in the markets, this is Alpha Fibonacci system at 38.45 this morning, correct? Is everyone seeing this? Where is the market right now? Market at 38.90. That's a very big difference. This is vertical bullish rally. You are never, ever, ever shorting near support. You're obeying bold green line. And if you understand trading ranges and you obey the rules, you have precise entry, you have precise stop, you have precise targets. What does the word reversal RZ means? It means reversal zone. S&P collapsing on this example, more than 5 points. S&P collapsing here from reversal zone, another 5 points. This is a market this morning with Alpha Fibonacci system on the top day trading instrument in US. Pure price for entry and Alpha Fibonacci for exits. You'll never, ever, ever need anything else. And this is what traders share all over the world. Traders who obey the rules. Leslie trades Dow, so is Rob. YM means Dow. Brad is a legend in the course, went from $10 an hour to $3,500 per day. Listen to Brad's podcast. Brad obeys the rules and trades with institutional levels. This is the market 6 minutes after market open. What is 3 points on S&P? $50 per tick, 1 lot, $150, 10 lots, $1,500, 20 lots, do the math. Choice is yours, what you want to trade. A manual trading NASDAQ. So when you come to the website, These are the traders you see. These are the traders who share. This is Brad. This is Emmanuel, brought his wife and best friend to the course. You will see much more next. Jean prefers to trade options. Scott is a hedge fund trader. Pablo, complete beginner trader. Every single one of these traders trading with institutions and never, ever, ever against them. Here's Apple in 2015-2016. Apple comes out with the worst earnings but respecting alpha Fibonacci support. I present at hedge fund event, and what do I state? The most important thing is this support. If this support will be respected, Apple will rally. That's exactly what happened. Apple skyrocketed, 2 years later reaching key alpha Fibonacci level. This is the end of the minor trend. After the earnings, Apple reaches next level. After next earnings, Apple reaches reversal zone. What would your trading be like if you knew that this support is critical on Apple? And when Apple in free fall, you know many months ahead where reversal zone on Apple will be. You are buying the bottom on Apple, you're protecting your profits. And when Apple's selling off from reversal zone again, you are very well prepared. Here's Apple this morning. Do you know what to do with your position on Apple? Apple 2021 selling off. This is Apple right now in front of you. How to manage your position? You must obey the rules. The bearish selling pressure on Apple from 140 to 120, $20 per share had been identified in our classes in trading room many months in advance. And this is after Apple split stock. Apple doing exact same thing as it had done in 2017, 18, 19, all identified many months in advance. Ken prefers to trade Bitcoin. He has zero interest in day trading. Ken took advantage of the crisis. View the movie on the website Ken has made about his life and what he accomplished with systems supporting family with 4 children. This is a movie maker who currently trades on his iPhone long-term Bitcoin, cryptocurrencies options. Here's Bitcoin right now with alpha Fibonacci system. Bullish rally in Bitcoin exhausted. Bitcoin stuck in this trading range. This is key support on Bitcoin, 45,000 level. How to manage your system on Bitcoin? You must obey alpha Fibonacci rules. Bullish rally exhausted. Bitcoin had been stuck in bearish correction for the last 2 months. And that's Ken's journey. Out of 156 trades, 156 wins. Ken keeps sharing his journey and story. And that's such a beautiful thing to see what traders do globally during the worst economic crisis. With the Alpha Fibonacci trading system, trader can trade any instrument of trader choice. Do you want to trade 1, 5, 15 minute? Is it S&P? Is it NASDAQ? Is it Dow futures? Or is it Bitcoin, Euro, Pound, Apple? Let's review other examples in the current market. Here's Tesla traders right now. Tesla sold out from Alpha Fibonacci reversal zone 2020. Currently, Tesla stock at key alpha Fibonacci support and key alpha Fibonacci resistance. Do you remember this level on Apple? Do you remember how critical this level on Apple was in 2016? This is your trading range on Tesla for the last 4 weeks. 600 is a key support on Tesla. Let's walk down memory lane and see the power of Alpha Fibonacci system with institutional reversal points in 2018. Reversal zone 388, key support 255. This has been trading range on Tesla for 3 years. 2019, Tesla remains stuck in this trading range. 255 is a key support on Tesla. So when Tesla is selling off, you know, many months, many years ahead, where reversal zone will be on Tesla. Where to look to buy institutional reversal on Tesla. So when Tesla is selling off, when key support is out, this is a stunning reminder. If you understand and trade with Alpha Fibonacci institutional reversal points, you will never, ever, ever need anything else. This is how pure system is. And this is Tesla now. Simply obey the rules and identify the instrument you want to trade. Alpha Fibonacci trader who trades at key institutional levels spends little time trading. Babysitting the charts is never, ever, ever recipe for success. Knowing when to be in front of the screen at key entry points is cutting your screen time significantly. So what would your trading be like if you traded with institutional trend reversals and trend inceptions entry? You would spend so much less time in front of the screen. So if you strategize as institutional traders do, if you identify institutional trend reversals prior to placing a trade, you trade drastically more consistently with a lot less stress, with a lot more predictability, with a lot more strategic trading. And here's a system on Dow futures, pure and simple. Pure entry, pure stop, pure targets. Do not overcomplicate trading. Do not block price with indicators. You do not need delayed indicators. What you need is pure price. At the end of the day, this is what indicators developed after. Indicators look good after the fact. Fibonacci is the only predictive natural tool combined with pure price. It gives you ultimate power. And that's what Carlton shares. Healthcare executive trading Alpha Fibonacci system in the evening. Carlton brought his best friend Joe to the course. Carlton trading for hedge fund and receiving text on Christmas Day is the biggest gift. Listen to Carlton. If Carlton can do this, so can you. Amazon with Alpha Fibonacci system since 2018. You see many months ahead where Amazon will sell off from. Despite excellent earnings, Amazon selling off more than $700 per share. And this continues for the next 2 years from 2000 level on Amazon. And you knew this since 2017. This is your investment position. And this is exact same thing that played out on S&P. This week. This is day trading from our trading room. This is exact same reversal zone as you see on Amazon, on Apple, on Bitcoin. All of this was identified well before market open on Monday. We discussed this in class. If I convert this chart to 5 minutes, this is a system in front of you this morning. And this is the sell-off from reversal zone. It's identical to Amazon. It's identical to Apple. It's identical to any instrument you choose to trade. You do not need delayed indicators. You only need pure price. And when you can trade pure price, you can trade anything you choose with Alpha Fibonacci system. As traders keep share in the room on any and every instrument, stocks, Bitcoin, options, as Scott is joking, it's a crypto fest. And that's every trader's different journey. Jennifer prefers to trade Nasdaq, Preston, Dow, Ken, multiple variations of Bitcoin, Scott stocks. Choice is yours. Which one do you want to trade? So this is the reason I live and breathe what I do. This is the stories of traders from all over the world. When Emmanuel bringing his wife to the course and his best friend, this is what traders do with 2 little babies at home. As Jennifer shares, I increased my account by 70%. This is during crisis in August. Emmanuel more than doubled. Despite kids, businesses, crisis, etc. And this is a reason my students become my friends for life. You simply have to make exact same effort. As Jennifer shares, everything you teach is 100%. It is all on me to succeed. As she shares, this morning at 8 a.m., I'm free to do whatever I like. Enjoy my children, go for skate, it's freedom. If COVID could just go away, I could do this in the South, friends. That morning, Jennifer traded NASDAQ in about 10 minutes. That's it. What do you want to trade? Is it NASDAQ? Is it options? Is it Bitcoin? Choice is yours. Simply obey the rules and the sky is the limit. There is no speculation here. Precise entry, precise stop, precise targets. Rules will forever remain the core of the Alpha Fibonacci system. No speculative stop, no speculative targets here. Rules, the core. Here's a system on oil. From 2016 to right now. 2016 oil at the bottom. You're trading the system, you're looking to buy multiple oil stocks. You're trading the system, you're buying different oil variations. 2 years later, oil doubling the value, and you know many months ahead where reversal zone will be, where oil will sell off from. And when oil's selling off, what do you know ahead? Do you remember 93 on Apple? Do you remember 255 on Tesla? It's a critical key Alpha Fibonacci support after first support at 64 is out. You know many years ahead, many months ahead, that reversal zone is where you will be buying oil. Please do not forget oil contract dates change every few months. Oil keeps selling off in 2020 when 38 is out. You know many months ahead where oil heading to next 15 and showing on the current oil contract reversal zone on oil at negative. So when oil skyrocketing, what would your account look like if you bought institutional reversal? as traders do all over the world. This morning oil no longer at the bottom. This morning oil testing key alpha Fibonacci support. This is the power of the alpha Fibonacci system that identifies all institutional reversals in advance. But this is exact same thing that playing out right now in front of you on S&P in the current live markets. We are at the bottom. Institutions are buying again, not shorting near these levels, correct? This applies to every single instrument you will choose to trade. And if you're looking to trade Forex, of course you can. We have multiple traders currently in the course who trading Forex. Key support on pound respected for 7 years. But when pound crashes to ultimate bottom 1100 level, has anyone seen good news in Britain? Tell me, how is it possible pound rallying, skyrocketing? It's simple. When reversal zone is reached, you never ever shorting into. You expect reversal. And that's the reason our students winning Forex competition. It is absolutely your choice what you will decide to trade, but it's critical you identify your trading range. Every day it will vary. Every day market conditions will change. And in current markets, when institutions are holding positions, these challenging markets are here to stay. So if you master current markets, everything else will be a breeze. But this is a world of difference. This chart on S&P traders, the biggest vertical rally that I was teaching in the class right prior to webinar, Alpha Fibonacci system identified many months ahead. It's a world of difference. Trading this, when institutions taking positions versus trading this, when institutions holding positions. This is what your success starts with when you understand the difference. So the most powerful lesson of 2020 is stop listening to noise, stop listening to panic. Top 1% that owns news channels just became 40% richer. How did that happen? Ask yourself that question. More and more offices being opened in Miami and Palm Beach. Institutions holding longs. Do you know what that means? We're discussing all the details in class, but again, to remind you, this is what Alpha Fibonacci system looked like a year ago. So please understand the difference, as trading now is a world of difference than trading institutional entry point. Never ever confuse the two. You trade, you think as Goldman Trader does. The only difference, you trading your little, your micro, your macro account. But you always trade with them. You never ever trade against them. And that's the core of the system. And that's how pure system is. This is Alpha Fibonacci system on NinjaTrader 8 on gold future. Pure entry, pure stop, pure target. But if I take you right now to long-term position on gold, this is gold with Alpha Fibonacci system in July 2020. Gold reversal zone identified many months in advance. And when gold selling off, there is no surprise. Gold sell-off remains in a progress. Do you understand that? Do you know how to manage your long-term position on gold? So if you want today or position trade, simply obey Alpha Fibonacci rules, and the skies are the limit. But what is a very powerful lesson on long-term investments on gold right now? Gold collapsed from 2000 level, correct? Currently reached Alpha Fibonacci reversal zone. Gold at the bottom, testing you to the core. Again, this was gold almost a year ago, before gold reached 2000 level. What would your investments look like? What would your day trading look like if you knew institutional reversal entry points? And that's what Brad shares in his podcast, in his journey. He's a legend. From $10 an hour to $3,500 a day. Brad simply obeys the rules and riding institutional power with institutional entry points. I just received a mail from him 5 minutes before the webinar. So with the power of the scanner, trading becomes drastically easier. This is a scanner in front of me. With a single click, you can add any instrument you choose. Choice is yours. Is it bonds? Is it cryptocurrency? Is it all? Of course you can. You decide what you want to trade. Scanner removes the need to flip charts and chase markets and place trades after the fact. It is never ever a good thing to do. That's how Scanner looks like when alerts pop up. So if you're ready to trade with supportive community of positive, successful, driven traders who are making an effort with a system traded globally, I look forward working with you. I love what the manual says. It's very, very simple. Alla's teaching is ridiculous. If we just listen to what she teaches, we will be millionaires in less than a year. Ken confirms this, so does Scott. Gary shares, this is a traders all over the world. And that's the reason I love what I do. So here's my gift to you. If you're joining us right now, the first week in April, first 3 days of April 5th, 6th, 7th, you will learn more than the previous 20 years of your trading career. You will learn the system you can trade globally on any instrument you choose. This system I taught to JP Morgan trader. What you will learn you can apply on any instrument, on any platform. Alpha Fibonacci system traded globally. Is it TradeStation? Is it Thinkorswim? Is it MT4, MT5? Is it Interactive Brokers? Of course you can. Software for Ninja 8 came out in 2019. So please listen to these traders' journeys. View movies traders made about this life. View the movie Ken about celebrating Fibonacci Trading Institute, his journey and Brad's journey, and choose from package appropriate for you. Currently, we're offering savings up to $5,000 for each package. First package is a lifetime system for any platform with live classes, with video library, with modules, with special event first week in April. Second package is the most popular package. It's a lifetime software for Ninja 8 with multi-market scanner, with trade recognition software. And you can trade this exact same system on any platform. Video library modules included for each and every package with live guided trading. For private mentoring, I have only single spot left. If you're considering signing up for private mentoring, pretty please speak with me first. This is institutional alpha Fibonacci system traded all over the world since 2011. So when you view what students do all over the world and tens of thousands emails I receive, I look forward receiving it from you. This is Richard at the end of February. Remember, he started his account with 3,600 on December 7th? A month ago, it's 18,400. This is the most challenging market conditions. In the next few days, I will get another update. I always stay in touch with my traders. If Richard can do this, so can you. Simply obey the rules and make an effort. So please, read and view what traders do all over the world. If these traders can do it, so can you. With Steve, I'm working tomorrow morning. Steve focusing on options. I also focus on improving traders' well-being. I dive much deeper in private mentoring than just trading. Steve's health drastically more improved because your health impacts your mindset, your trading decisions. In private mentoring, I dive much, much deeper into your own individual news. That's it. And that's the power. And that's the reason why I love what I do. Bread is my friend forever. So thank you, traders, so much. If you want to trade like Gerald, institutional S&P mini floor CME trader, I look forward with you. Simply make an effort. Any questions? Simply pick up the phone and call 925-257-4298 or info@fibinstitute.com. Thank you, traders, so much. It's been my joy and pleasure being with you. If you would like to join us in the trading room, if you would like to see the power of Alpha Fibonacci system in the live markets, simply fill in this form of the website and you will receive the invitation. Because if traders globally trading the system, so can you. Thank you, thank you, thank you.